This is the Biden American Rescue Plan. It will be followed by the American Recovery Plan. And it's about just that, saving lives and livelihoods and giving people hope for the future.
1.9 trillion, and they are just getting started. House Speaker Nancy Pelosi, the House voting on that $1.9 trillion plan later on today. From New York City this morning, good morning. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. Your price action this Wednesday morning looks like this. Equity futures up 2. We grind higher by not even 0.1% in the FX market. Euro dollar pretty stable too, 118.94 on a single currency. Even with a move in the bond market, have we finally gotten over this? Yields up by 3 basis points to 156 on 10s, Tom. Some big supply coming up a little bit later.
Well said. We're getting used to it. A 1.56 on the 10-year, 2-year with some stability. I would note after the big day yesterday, John, the VIX migrates 24 into 23.49. That's not that far from that glory of 21-22, is it?
Excuse the cliches, but one day not a trend. But I do wonder whether we do start to get some stabilization. I caught up with BlackRock yesterday and talked about the symmetrical risk, increasingly symmetrical risk around treasuries after this massive move. When do you want to lean back into the growth, the winners? BlackRock are sticking with those secular winners.
Right. Well, there'll be 2 hours of debate, John. Let's migrate over to Washington. 2 hours of debate today in the House over who gets to stand in line to get a pen from President Biden as he signs a stimulus document. Festivities in the House today. Emily Wilkins here to give us a brief. We're the Bloomberg government. Emily, I know it starts at 9 a.m. Do we need to tune in, or is this boredom personified?
You don't need to tune in quite at 9. We're going to have 2 hours of debate before the actual vote on the bill. And remember, these votes are taking a little bit longer because you can't have 435 people packed into a room during a coronavirus pandemic. But we are expecting the bill to pass the House today. We heard yesterday from Democratic Caucus Chair Hakeem Jeffries, who said that he was 110% confident that Democrats have this vote to pass the bill and from there send it to President Biden's desk.
When do they get the check? When do the people get the check?
Well, the Biden administration says they're aiming to get it as soon as possible. You heard yesterday White House Press Secretary Jen Psaki say that Biden's signature will not be on the check. She said that that is part of the process to expedite things out quicker. If we're looking at what happened back in December, it looks like the government's going to pop it a couple days.
Emily, John's got his heart set on the down payment in the Hamptons. When does Farrell get the check for the stimulus?
Seriously. Well, if he needs the proper caps, it's going to probably be a couple days for the government to start processing it.
Emily, you don't have to humor Tom for that, because really he's just trying to push John's buttons, and I'm guessing we'll hear a lot about the Dow later today. There is a question of how quickly they're going to move on to the next round of support or stimulus, particularly infrastructure spending. There is a belief this was the last COVID-specific stimulus bill. What's next, and what's the timeline?
Well, it's interesting because President Biden is sort of already pitching this next bill as COVID stimulus, but not sort of short-term COVID stimulus, but long-term, helping the economy, helping it come back as strong or stronger than it previously was. We're expecting to hear a little bit more about this when President Biden addresses the nation tomorrow. But this is something that lawmakers have already begun working on. There are bipartisan meetings. And the question is, both Democrats and Republicans, they are supportive of transportation issues, infrastructure issues, but there's still some big questions that are going to have to be figured out. How this bill is paid for, different things dealing with labor laws and regulations. So there are definitely going to be some sticking points, but at this point, it is something that both Republicans and Democrats are interested in getting done.
Emily, what's easier, getting the centrists to agree on something and pass something on both sides of the aisle, or getting Democrats to unify around a specific plan?
I think this last plan, you saw that the answer was Democrats decided that it was just going to be easier for them to go it alone and to actually get this done. And one of the things you did hear a lot with Democrats this last time is that they had made these promises to voters, the promise of the individual checks going out to Americans. And I think, you saw that 1.9 trillion number set pretty early on. I think this time with this upcoming bill, there's going to be a little less ties to exactly what happened with the past election. There's going to be a desire once again to get something done in a bipartisan manner. But the fact of the matter is that reconciliation process that requires only Democratic votes, that's still an open path, and that's still a path that Democrats are looking at.
There's 2 presidential Joes. The other one is Senator Manchin. And Emily, that's the issue here, because he's already come out and said that he wants this to be bipartisan when they go forward with the infrastructure negotiations. This can't be along party lines because he doesn't want to come. So how are they going to do this?
Manchin's not the only one who is saying this. I mean, there is a recognition sort of across the board that there are only certain things that can be done with reconciliation. There are some infrastructure projects that quite simply can't go through that process. You need to go through the regular process. You need to get those 10 Republican senators. And so there are discussions about perhaps dividing the bill, doing part of it through reconciliation, part of it through a more regular process that could garner bipartisan support. But I definitely think there is that interest, not just with Manchin, but sort of across the board on working with Republicans for this one.
And that there, Tom, is the biggest issue right now, that even though both sides of the aisle agree on the need for an infrastructure plan, it's going to be much, much harder to get it done than this $1.9 trillion plan was.
And it's got the, what do you call them, entitlements? Earmarks. It's got the earmarks involved in it as well, and all the horse trading over that. John, I think we need to get a box of cigars, head down to the Willard Hotel, and that's where we'll see the action.
I'd love to be able to travel down to the Willard with you, Tom, and have a cigar. Lisa, I'm not sure when we can actually get to do that. In a month, 2 months, 3, 4, 5?
There are some projections coming out of a number of places that 75% of all developed market countries, their populations will be vaccinated by late summer.
Amazing. Amazing. Emily, let's finish there on a vaccination rollout. A lot of these states are getting ahead of the CDC. I think Maryland recently, the latest to start reopening and push that reopening process as well. Do you sense that the administration will try and set the tone here, or just let states run the show?
I think since President Biden was inaugurated, even before, his administration has really focused on messaging around the coronavirus, messaging about masks, messaging about vaccine rollouts, about what they want to see happen with schools and the economy. But let's be real, to a certain extent, this was always something that was going to be left to states and localities as far as getting out individual vaccines. You've sort of seen the Biden administration take more of a top-level role, talking with vaccine manufacturers, trying to encourage deals like what you saw with Johnson & Johnson. But at the end of the day, I mean, the federal government's not the ones putting shots in arms. That's definitely a state and local thing.
Emily, great to catch up. Good to see you early this morning. Emily Wilkins down in Washington, D.C. of Bloomberg Government. 2.15 million doses. That's your latest tally of the daily average over the last 7 days in the United States of America. 9.7% fully vaccinated. 18.4% the population, Tom, has had at least one shot.
Yeah, those are the numbers that are visible. I'd look at something that I think is off the radar, which is not only the improvement in hospitalizations, John, but it's the way we've come down. The smoothness, the decline of hospitalizations nationwide is hugely optimistic.
And Lisa, states aren't waiting around. The reopening is starting. That push is really ramping up.
People are exhausted. They're done with this. I mean, honestly, it's been a long 12 months and people are done and states are responding and they're dealing with economic issues. I get it, but there's a question of whether they need to hold on for a couple more weeks.
Feels longer than 12 months, doesn't it?
Doesn't it? Yeah.
It really does. Coming up, Admiral James Stavridis, the Bloomberg opinion columnist and, of course, former NATO Supreme Allied Commander. Looking forward to that conversation a little bit later this morning. Futures down a single point. No drama here. Bond market yields up by 3 or 4 basis points on 10s to 156 and a ton of supply in the next 24 hours. This is Bloomberg.
90% of the world's trade travels by sea. At any given time, around 5,000 ships are on the ocean carrying containers. Without them, the global economy would collapse.
Many of those containers pass through here, Singapore, the world's second largest port. The industry accounts for 7% of the country's GDP.
But the industry is under pressure. The uneven recovery from the pandemic is creating a shortage of containers where they're needed most and driving bottlenecks at major ports. It sent freight prices soaring.
Since the beginning of COVID-19, these are levels of shipments that we've never seen before.
Chinese New Year marks a seasonal turn for freighters when rates are renegotiated for the next year. Companies must choose whether to swallow the financial hit or pass on the cost. It's a decision that could bring new headwinds for the global economic recovery.
We're in the beginning of 2021. What are your biggest worries?
The inequality of the current world environment. It's troubling, and I think it's actually getting worse, which is a big challenge.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
From New York City for our audience worldwide, good morning to you all. This is Bloomberg Surveillance, and here's the price action. I'll keep it snappy. Great conversation coming up on this show. Equity futures coming in 0.2%. We roll over just a little bit. The Russell, the Nasdaq. Russell unchanged, the Nasdaq down 0.6 after a monster day of gains. Up 4% on the Nasdaq 100. I think Tesla up about 20 on a single session. Switch up the board and get to the bond market. 2s, 10s, 30s, ahead of some 10-year supply a little bit later on this afternoon in America. Your yield 156 on a 10-year. Yields higher just a little bit, up 3 on 10s, up 4 on 30s. The curve just steepening, a bear steepness, so to speak, but a mild one so far. Let's finish on this in foreign exchange. The dollar, really, really whippy, volatile over the last couple of sessions. Huge move against EM through Monday. Then we reversed that move. Today, dollar unchanged, just about, Tom, holding on to that 92 handle on a dollar index.
Yeah, I really want to point out, John, EM a mess as well. We got to really watch that, and particularly looking at Chinese equities as being a challenge. This is a joy, and on March 10th, we get out front of what is possibly my book of the summer. I'm not willing to say that yet, but boy, does James Stavridis go to the top of the pile. Admiral Stavridis provides value as Bloomberg opinion columnist, the former NATO Supreme Commander. We're thrilled that he could join us with Ackerman and Stavridis 2034. It's a 303-page novel that begs to be read now. Admiral Stavridis, thank you so much for joining us. The banner that begins your book is chilling. It is a March day in 2034, and our United States Navy is in the South China Sea looking and staring at China. Is there a risk here that we need to wait for war with China before 2034?
Low risk over the next few years, but the reason we set the book about 15 years in the future, Tom, is because that's when the trend lines really start to look difficult, shall we say. Chinese cyber capability goes up, their maritime capability goes up, their ability to employ stealth, their determination to hold on to the South China Sea where the novel opens. It could be a collision, it could be a miscalculation. We ought to worry about it, and 2034 is a cautionary tale.
On page 126, I think this is so important, John. The couple sliding in a couple of beers at the Old Ebbitt Grill or the Hay Adams Bar, and then they came back later. I mean, forget about that, John. This is outrageous where Stavridis, John Farrell, is going to the fiction of someone having cocktails at the Hay Adam Hotel.
And now I know
John,
why you like
impossible.
the Admiral so much, Tom, because this is the same approach that you have to foreign relations as well. Admiral,
We were going to set that scene staying at the Willard Hotel, which also has a great round-robin bar. So
there we go.
I know my DC bars, not to worry.
I'm sure you've shared a drink with Tom at several of those bars as well. Admiral, looking forward and how this relationship evolves, there has been talk, and I believe it came from the South China Morning Post in just yesterday, in the last 24 hours, that there could be a meeting with the top envoys between the United States and China, potentially in Alaska. How do you think this relationship resets? What's the approach and how is it different to what we saw with the previous administration?
I think you'll see the Biden team work from a script, if you will. They'll create a strategy. They'll put together military deterrence, diplomacy, economic tools, cultural tools, strategic communication, and above all, work with our allies. That's the formula here. The Trump administration was very episodic, very tactical. I think you're going to see a more strategic approach. That's what we need. This is the big strategic challenge of this part of the century.
What's the objective? What do you think the objective should be?
I think a strategy ought to seek to confront where we must. We can't turn over the entire South China Sea to China as territorial waters, which they claim. We've got to confront them there. But we got to cooperate wherever we can. We got to find zones of cooperation. Example, the environment. Example, prepare for the next pandemic. Example, work together on medical diplomacy in the developing world. So confront where we must, cooperate where we can. Let's avoid the 2034 scenario at all costs.
Admiral, you're giving me permission to go with gloomy what ifs, which is basically what I like to do with my pastime. And I'm wondering, as you look toward what some of the risks are, I'm curious, what does a world war look like in a post-nuclear era?
It's going to include cyber as a significant component, particularly by the end of this decade, as quantum computing collides with what we think of traditionally as cyber bits, ones and zeros. Computing, much more complicated, opens many more abilities. Stealth will be even better than it is now. Space will be an important component. That's why the United States created a space force. And finally, you're going to see good old-fashioned naval conflict here because for better or for worse, we're not going to get into a land war with China. It's going to be played out in the scenarios of the South China Sea more than anywhere else.
Do you think that the United States has both the intellectual capacity in the government jobs that need to be filled in order to prepare ourselves for some of the cyber attacks, as well as the investment on the private side towards some of these resources?
You put your finger on the key element here, which is private-public cooperation. The government can't do this by itself. A good first step would be to create a cyber force, just like our Space Force was created a year or so ago. But secondly, there has to be pretty seamless cooperation across this enormous threat surface that we're facing. So we've got work to do in that regard, and we're going to have to compete hard with Silicon Valley to bring that talent to bear on this problem in cyber.
James, the shocking immediacy of this book, 2034, is from your heritage of coming out of San Diego on a boat when you were a kid. And of course, also Elliot Ackerman's wonderful work. The realism of this is tangible. Is our U.S. Navy ready to do what's in 2034?
Yes, and they are already at sea. The challenge is going to be numbers of ships. And even now, this may surprise you, Tom, but China has more warships than the United States does. Ours are more capable. We have those big, beautiful nuclear aircraft carriers. China is gaining airspeed in this regard.
I don't mean to interrupt, Admiral, but this is so important. We've lost Hong Kong. We can't show the flag there anymore, I believe. Where is our harbor as we base affairs out of the South China Sea?
We're going to be forward, Tom, from Guam. And that's going to be the forward base. Remember, it used to be Pearl Harbor. Now you're all the way forward to Guam. And a second important piece of this is up in Tokyo Bay, ironically enough, where World War II ended. That's our largest naval base in the Pacific, is in a place called Yokosuka, Japan, in Tokyo Bay. That's where the 7th Fleet is based. They will go forward. They'll also operate out of bases in South Korea. It's good to have allies in this one.
Admiral, I want to finish up by where you think this is going. You've talked about the objective, and I think it's really important to understand where things are heading and whether we can just slow them down or whether we can change the outcome. Do you think the outcome is already predetermined now?
I do not, although we ought to be concerned if we look back in history. So often when there is a established power, Athens, confronted by a rising power, Sparta, or an established power, the United Kingdom, 100 years ago, challenged by a rising Kaiser's Germany. So often those scenarios do lead to war. We can still avoid this. That's why we wrote 2034, to lay out a cautionary tale. We need a strategy to do that employs all elements of U.S. national power, and we need to understand China better. Today, China knows us better than we know China. We have work to do.
Admiral, before we let you go, why a novel? And why now? I believe this is your first novel ever. Tom just may have tried to throw it out at John. You did try to throw it. I just want to confirm that. Did you not just throw that book?
George Clooney's going to play Stavridis. Leonardo DiCaprio is going to play Lieutenant Farrow. Come on, it's a no-brainer.
All right, so why fiction?
Because in fiction, we can allow ourselves to imagine the future. If I'd written a dry as dust policy kind of book,
right,
interest items, but this reaches the big audience, and I want to let people know this is a real danger.
James Stavridis, how is our new defense secretary doing? I forgot his name.
Secretary Lloyd Austin, one of my contemporaries, a wonderful officer. He's off to a terrific start by being steady, by being very concerned about the people in the force. He's a real expert on the Middle East. He's going to...
Okay, position closed on euro. As you can see, at 118, 887. We was holding it from 8 o'clock until today, until 11:40. So well done, guys. If you follow this trade, you made quite a good profit. In our case, we made £1,000. So this is where it got filled, and I'll show you for other traders or people who this channel created. We created this channel for people who money would trade, so they can see how we trade their money and how much we make, how much profit on daily basis. So stop, profit, £1,000. Okay, guys. Well done. I'll speak to you later, and I'll let you know when, if you want to carry on following the trades, I'll let you know when next pair will be available, when we will receive signal to buy or sell short pairs. As you can see, we have on our screen 1, 2, 3, 4 pairs and 1 Bitcoin, right? So I'll speak to you later. Stay safe.
Really started to tick higher, and these are the kind of things that just sort of knock people off course. No, I just have to get my hands around this. I think it's really, really important that we've all got a game plan. Everyone's got a game plan. We're going deeper into this year. The data will get better, inflation will pick up. It's base effects, it's energy, and then when the data starts to come through that way, how the conversation changes, I think, is going to be really important.
I'm going to go to the GDP growth estimates up. Transactions are occurring like GE we haven't even mentioned, and also Adidas raises their organic revenue growth.
I'm not having that debate.
Adidas.
Coming up,
Helen Zentner calls it Adidas.
Johns Hopkins Bloomberg School of Public Health Vice Dean. It's going to be Tom talking and me talking over him for the next 2 hours.
I was going to say 20 years.
4 points for the S&P. It's been the last 10 years. Coming a 1/10 of 1% on the S&P, and a bond market up 3 basis points to 156. This is Bloomberg.
With the First Word News, I'm Rishka Gupta. The House is set to send that $1.9 trillion coronavirus relief package to President Biden for his signature. The measure will provide an economic boost that will last long after the $1,400 checks start arriving this month. House Democratic leaders expect final passage this morning. The measure also includes supplemental unemployment benefits, an expansion of the child tax credit, and aid to state and local governments. BioNTech says it could have the capacity to make 3 billion doses of coronavirus vaccine with its partner Pfizer next year. That would make their pioneering shot far more widely available around the world. BioNTech and Pfizer have committed to making 2 billion doses this year. And Bitcoin's rally this week is on hold. The price of the world's largest digital currency fell after briefly climbing past $55,000. There's speculation whether Bitcoin will be able to again hit the record of just over 58,000 it set last month. Bitcoin's price has been bolstered by growing talk of institutional interest. The ceasefire in that big trade war is working. Once again, China is the biggest customer for U.S. farm products. According to the Wall Street Journal, American farmers are exporting record amounts of crops and meat to the Chinese, more than they did before the trade war. And a number of Wall Street A-listers fled to Florida during the pandemic. Many are eyeing a return. In fact, Postal Service Days indicates that relatively few New Yorkers moved permanently to Miami or Palm Beach. In fact, New Jersey, California, and Connecticut were the most popular moves. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Women leaders were actually better at controlling the deaths from COVID-19. Do you think out of this pandemic, we'll see more countries be willing to elect female leaders?
When we look at women leaders, we tend to project on them baggage that they shouldn't bear.
Women are given an opportunity when no one else wants to do the job.
Women had a very clear objective. They wanted to save lives.
The women leaders, if you look at their careers, have also built up a level of trust.
In fact, women have to be better at communication in order to be elected as leaders, whereas this doesn't hold true for men.
We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women is not only the business of women, but men have to be part of it.
It's such an interesting new world.
The world is changing.
For us, it's not about being first. It's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. It should just be something that people do.
I have asked the Securities and Futures Commission and the Hong Kong EX to work together to explore the viability of our own Hong Kong version of SPACs. We remain very confident on the competitiveness of the Hong Kong stock market.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
I am David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
possible we could further increase our manufacturing capacity. So I don't see a limitation why we should not be able to produce even 3 billion doses in 2022. And it really depends on the demand. It depends on factors, for example, whether additional boost vaccinations are required.
What a success story. Dr. Ugur Sahin there, BioNTech's CEO. Unthinkable 12 months ago when we were going into this that we could get a vaccine this quickly. From New York City, for our audience worldwide, good morning to you all. Alongside Tom Keene, Lisa Bravis, I'm Jonathan Ferro. Your market looks like this morning. We come in 5 on the S&P. Not a big move, down a little more than 1/10% as yields climb back towards 156 on 10s, up about 3 basis points. How much supply later, Lisa, on 10s?
We got, I believe, 38 billion.
38 billion this afternoon, 30s tomorrow. In the FX market, euro dollar just south of 119. We come at 1/10%, Tom. Just a bit of dollar strength against the weaker euro there.
Interesting data here. We'll watch it through the morning here. And again, as I said, I'm focused on those auctions and also really how we open at 9:30. Look to the open with Jonathan Ferro at 9:30 to find out how we sit this morning. Right now, Joshua Sharfstein with us, Johns Hopkins Bloomberg School of Public Health. Of course, Mr. Bloomberg, founder of this shop and also this media and radio, this radio and television property as well. Joshua Sharfstein, I want to go to Camus' The Plague. Part 1, Part 3, and then Part 5, the part nobody reads. All of a sudden, things get better. He talks about the enemy abandoning positions. What is our behavior at the end of a pandemic?
Well, in that book, people want to forget about the plague as quick as possible, and just go back to life as much as they can, even though they've had this experience. And a really important question is whether we do that and not learn the lessons of this pandemic. Right now, we're seeing the virus on the retreat, which is fantastic, but we have work to do. We have a lot of people to get vaccinated. We have to really push the virus so far down that when it tries to come back, maybe in the fall in a bigger way, we're really ready for it. So I think vigilance, which is a key word in that book, is a key word for us now, too.
Joshua Sharfstein, the news of Alaska is simply joyous. Do you look at Alaska as an outlier because of its geography, its dispersion of population, or can you transpose Alaska over to the 48 states?
I don't think it's exactly analogous, but the concept that we'll be able to make vaccines available for everyone, people will be able to get vaccinated and be able to start to do things again. I mean, that is already rolling out in different places at different speeds, but will be here for all of us if we keep with this program and we're able to avoid a unfortunate surge of the variants of this virus.
Professor, there's a question about how dangerous this virus is to younger individuals, people who aren't immune compromised, people who get it, who don't have a lot of symptoms. And now there's emerging research about long-lasting implications, long-lasting health effects. Can you talk a little bit about what we've found and what the broader ramifications from that could be?
Well, some people do get a very difficult syndrome that has lasted for a while. Many people report like a brain fog, fatigue, trouble sleeping. Now, it's a percentage of people, but they don't necessarily have to have had a very severe case. That population of patients needs a lot of research, needs a lot of support, and hopefully we'll find treatments that can really help them. But it's a reason why everyone should take this seriously, and it's important for people to get vaccinated because, I think it'd be much better to get vaccinated than to be facing that uncertainty.
Well, and that's exactly why I bring this up, this idea that people feel like, well, if I'm young and I don't have a problem otherwise to my immune system, just let me get it and move on with my life already. I mean, it's been a really bleak 12 months, and we're seeing some of the data coming out showing that the implications could be more significant. Do you think that the messaging around the severity of this virus has been insufficient so far to really give people a sense of why they ought to be cautious and remain cautious, frankly?
Well, young people tend to think of themselves as immortal, so it's a very hard messaging challenge. I think that people dream about winning the lottery. In this case, young people have to be worried about losing the lottery. Even though everything might say on average they're not likely to get very sick. They could actually get sick. There are people who get quite sick who are young, and they could wind up with this long haul syndrome. And so it's important for themselves, and of course important for the people that they might pass the virus to, who may not be vaccinated, who they're in touch with. So I hope that they'll see the value also of all the things they want to do being easier if they're vaccinated.
Joshua, some states aren't waiting. We saw Texas in the last couple of weeks reopening. Wyoming, I think, dropping the mask mandate recently. Maryland now the latest to reopen, but I think maintaining the mask mandate. I'm trying to understand the level of risk that we're taking here by reopening now, instead of just waiting a month, 2 months. What is the risk?
So, the risk is that there are variants out there that are highly infectious, more infectious than the coronavirus that we've largely dealt with the last year, and that those really spread around among people who are unvaccinated. People get sick. There is, some evidence that they may even be more lethal. So it basically is a risk that a lot of people could get sick and even die. Now, how big is it that we minimize that risk if we just take it a little bit slow? I'm not saying don't do anything, freeze in place, but sort of the stampede to go back to everything we were doing in 2019 is hasty and could backfire, and maybe one step at a time is a better way to think about it.
Joshua, appreciate your insight, as always. Look forward to catching up soon. Joshua Schaufstein there, Johns Hopkins Bloomberg School of Public Health, Vice Dean. Tom Keene, we've got a deal to talk about. General Electric agreeing to combine its jet leasing business with rival AerCap Holdings, the two biggest aircraft financiers. A deal poised to reshape this market. And Tom, importantly for GE, I believe they get a nice big chunk of cash too, $24 billion.
Yeah, this is Lawrence Kohlbeck of Danaher and his restructure of GE and jettisoning the finance. But John, buried in the wonderful Bloomberg article on this transaction is a simple idea. It will face government scrutiny. This goes back to one of the great theories of one of our wonderful guests, Catherine Mann of Citigroup, that in slowdown, in restructuring, you end up concentrating and moving to monopoly-like positions. This screams that kind of transaction.
Well, and it also raises a question of how much we're going to get more monopoly-like transactions in areas that were hard hit, John, from the pandemic. The idea that they're going to say, look, we need to survive. And in doing so, they're going to create monopolistic types of entities. They're going to create a real challenge, perhaps, in the next decade.
Especially for the big companies. If they want a dance partner, where do they find them? Lisa, I mean, that's a conversation on Wall Street as well. Many of these companies restricted from actually finding a dance partner.
And the fact that there isn't going to be that much pushback at a time when these companies can say, we're struggling. How else are we going to make it work?
I really question that with the new Biden administration and the tone we're seeing and the kind of people that they're bringing on, including, in regulation and the rest. I really wonder how the pushback will go here, John. I think it's a mystery.
Yeah, Lisa raised that point yesterday.
I didn't. I'm sorry. I failed. Thank you.
From New York City
See how we
this
got
morning.
that in? Where's the Dow? The Dow's up 62 Dow points.
Tom Keene and Lisa Bravitz, I'm Jonathan Ferro.
Look at
I'll tell you where the S&P is.
Thank you, please.
3870. Down about 3 points on the S&P 500. We come at 0.1%. From New York City this morning, good morning. CPI data about 90 minutes away.
their CPG history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into the SPAC thing a little bit before it became such a hot method of going public.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
The 1.9 trillion US stimulus. We think that will lift and global GDP growth.
We're about to have a $2 trillion stimulus, so the propensity of consumers to spend is very high.
Inflation is going to be a burst coming in the next 12 months, and then it's going to calm back down again.
This is not a Fed that's going to hike upon a falling unemployment rate, and it's not a Fed that's going to hike when they start to sniff out inflation. They are going to wait.
Fed policy inevitably at some point is going to shift.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
There is a monster plan down in Washington from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance live on TV and radio alongside Tom Keene, Lisa Abramowitz. I'm Jonathan Ferro. Tom Keene, the price tag, 1.9 trillion. It goes to the House later.
It goes to the House later. I get we get voting at like 12 noon into the 1 p.m. hour as well. John, I would really note after the celebration yesterday, you wonder within this churn this morning, when do we pick it up again with those rising GDP estimates?
The upgraded forecast, the last 24 hours, just phenomenal. Started with the OECD and Morgan Stanley's Ellen Zentner, who really kicked this off several weeks ago, goes again and looking for a 7 handle on GDP in America so far this year. So far, so good, Tom.
I would go where Bruce Kasman is with JP Morgan. Jan Hatzius at Goldman Sachs also talking about the global effect of what Nancy Pelosi has wrought.
Lisa, what next? That's the answer. That's the question being asked down in Washington now.
Well, right. In other words, what other stimulus are they going to come out with? Are they going to have an infrastructure plan? And also, how long-lasting will the effects from this $1.9 trillion stimulus be? Just to put this into perspective, when we were coming into this year, John, people were talking about perhaps $1 trillion. No one was thinking that they would actually get this big of a stimulus done this quickly.
Speaking of trillions, have you seen this from Dan Ives over at Wedbush, Tom? $3 trillion valuation on the horizon for Cupertino, in their opinion. That's the Apple story.
Well,
175 price target, our bull case target 225. They see $3 trillion on the horizon.
I'm so glad you bring that up, John. I defer to Mr. Ives and frankly to other true experts on the security analysis of Apple. I read yesterday of their product launches, a rumored March 23rd meeting, and then on to the autumn season and the usual that they do. And the pros are giddy. They're giddy about the new products to come from Apple.
Closed at 121 yesterday, 225, the bull case over at Dan Ives' Wedbush. Let's get to the story of the market right now.
Please.
Your equity market really, really muted going into CPI, 90 minutes away. Equity futures doing a whole lot of nothing. In the FX market, a similar story. Euro dollar 118.86. What are we in? About 0.1% or so. The euro, just a little bit weaker here, but a story in the bond market, yields starting to creep higher, but you just don't see the corresponding move in the equity market, not in a big way. Your yield, Lisa, 155.78 on 10s.
Yeah, and I think that it's the speed in which we saw the yields going up, and people took a look at sort of the worst day in treasuries going back in months being correlated with the worst day for the NASDAQ in 4 months. I mean, the correlation being very direct seems to be breaking down a little bit, but again, it's the controlled move. You mentioned 90 minutes time, CPI, we're going to be getting that February inflation data out of the United States. I am looking at the gap, the widening gap between inflation that we're seeing in goods versus the inflation that we are not seeing in services. And the question is, when do we start to see this shift? When do we start to see inflation going into both? Right now, it's going to be bolstered by gasoline prices, which are going up. If you filled up your car, you probably have noticed. Today, as Tom was saying, around noon, they're going to start voting on this $1.9 trillion stimulus in the House. It is expected to pass. And the question is, as John said, what's next? How quickly can they get to infrastructure spending? How much can they get unity among Democrats? And will they go it alone? And then 1 p.m., I'll be watching watching this closely, and evidently Tom now watches bond auctions very closely as well. There's going to be a $38 billion auction of 10-year treasuries. Very interesting to see whether we see the same dynamic as we saw yesterday in that 3-year auction. We did see the highest bid-to-cover ratio, a sign of how much demand there was, going back to 2018. Investors came out in force, but John, as you were talking about, there is an incredibly different dynamic here in the long end versus the short end, with a great degree of uncertainty about inflation. The short end very much pinned by the Fed, the long end pinned by who knows how much they're going to come in and buy there.
Oh, Lisa, thank you so much. Greatly appreciate this. If you have any interest in international markets, this is without question our interview of the day, the interview of the moment. We had Bruce Kasman on earlier of JP Morgan, his leadership in economics, and he needs to understand the minutia of EM. He turns to Gabriela Santos of JP Morgan Asset Management. As an aside, she speaks 14 languages. Gabriela, wonderful to have you on today. The Chinese stock market is down 14%. It is truly plunged. Why?
Thank you, Tom. And English is one of those languages, so we're good. In terms of the Chinese stock market, we have seen a correction from those February highs. I think it has very much to do with a similar story to what's happening in the NASDAQ in the US. Chinese markets are extremely growthy. They're very geared towards technology, innovation, and they did extremely well last year during the pandemic. Top performing market, 30%. So came into this year with elevated valuations. So I think all you're seeing in Chinese markets is just a correction from a very, very good year last year.
What everybody wants to know, Gabriela, is your reset on emerging markets. You talk about a tug of war. There's many tug of wars in many different parts of EM. Can you stay in EM? Can you add new cash to EM, or do you dash to America?
No, emerging markets is for us both cyclically and structurally an overweight in portfolios. But I think it's important to understand how emerging markets have changed. So it's a different emerging markets at the beginning of this cycle than it was at the beginning of the last cycle. It is an index that is a lot more growthy. It has a similar percentage of tech to the US, about a quarter of the index. It has 65% exposure to growthy regions like China, Korea, and Taiwan. So you can get a correction in broader EM markets when you have a correction in growth. If you're looking for cyclicality in emerging markets, you have to do that actively. You can't just rely on the benchmark. So for us, EM is really about alpha this year. It's really leaning into some cyclical areas of emerging markets. For example, in China, right? It's playing the consumer recovery in China this year through consumer discretionary, as well as Chinese banks playing the improvement in credit growth, especially for small and medium-sized companies.
Can emerging markets rally if the dollar doesn't keep weakening?
Yeah, so I think the dollar has always been critical for emerging markets, and it's really a function of why the dollar is moving. So there are really two extremes that cause the dollar to strengthen, and neither of those are good for EM. On one side, it's the U.S. doing better than everybody else, or U.S. exceptionalism. We've had some of that here at the beginning of the year. And the other extreme is the U.S. doing too poorly and us having fears of some sort of issue in the U.S. and broader global economy. And we've kind of been toggling between these two extremes, causing dollar strength. Ultimately, though, we think this is just a pause in what should be a broader cycle of dollar weakness as we get to the sweet spot where the U.S. is doing well, but so is the rest of the global economy. So I think it's a pause in EM before we get a broader rally again.
And this goes into your call where you said we see a positive setup for risk assets over the next 12 to 18 months. The question is, and to me this is the key question, how quickly we move to mid-cycle. What are you looking at? What are the benchmarks that you're looking at to determine the answer to that question?
Yeah, it's fascinating. This cycle is so different than the cycle we had last time, just the speed through which we're moving it. In terms of the economy, we look at the unemployment rate as a measure of where we are in the cycle, and we think we'll hit, go back to full employment over 2 years from peak to full employment. Remember, that took 10 years during the last cycle. So we're moving very fast here through the economic cycle. Now, the cycle doesn't end when we reach full employment, but it does slow down back to potential growth. In terms of the market, even faster. It took us 6 months to reach all-time highs again instead of 5 years, which is what took us last time. So I think we're also approaching a more mature phase of the market cycle where returns moderate and they're a lot more related to earnings growth.
I'd be remiss, Gabrielle, if I didn't ask you about Brazil. We had Lula once, we have Lula again. We've got Brazilian real in retreat. It's one of my great missed calls of my career. I was totally wrong on Lula and the prosperity of Brazil. Can he do it again?
So I think that's the big question. And investors, if you look at the way the Brazilian real has been weakening or long-term bond yields have been moving, I think investors are answering no to that question. And it's all about the kind of team that a potential President Lula could get together. And there's a perception that this time around things are so polarized that we would really see a less orthodox team than the first time around. So I really think the balance of risks for Latin America has worsened significantly related to local politics.
Gabby, thank you. Great to catch up. Gabriela Santos there of JP Morgan Asset Management. Finishing up there, Tom, with Brazil. That move on Monday was massive for the Brazilian currency. It was a 2 percentage point move, and we haven't really corrected in the subsequent couple of days afterwards.
No, we haven't at all. Brazilian real through 6 would be really historic. I haven't looked at a long-term chart in a while, John, and really done the math of the technical analysis on it, but it's certainly in retreat. It is idiosyncratic, but nevertheless, the size of the Brazilian experiment is very important.
That is the drinking game in EM. And the story right now, Tom, going back to that OECD report in the last 24 hours, is the 1 percentage point upgrade to global GDP that we saw off the back of a $1.9 trillion plan. How much of that is just going to be about the United States? And Tom, how much of it will bleed out? We saw in the last crisis coming out of it, China went gangbusters on stimulus. And what happened? It bled out to the rest of the world. Will the same thing happen in the United States just by the nature and the character of the economy? I think a lot of economists would push back, Tom.
Major mystery. And yes, I think we're going to see pushback on that. But also, you know, it gets to feed on itself. It becomes, you know, a spiral, like the spiral of disinflation or deflation. You can have the spiral of stimulus, John.
Well, can I just bring out this data from Citigroup? I was referring to it earlier about the vaccination schedules. They say that herd immunity will probably be formed in most developed markets by the third quarter of this year, the fourth quarter. In emerging markets, that turns to the third quarter or the first half of next year. A big difference when you talk about corporate solvency and the potential for growth over the long term.
Yep, it's not going to be a global story in quite the same way. That synchronized story just doesn't stack up right now, does it, Lisa?
No, but the question is, can we push past that, given the fact that we're going to be getting sequential recoveries that will help fuel a general growth as we all move out of this?
Surveillance herd immunity is when both Lisa and John ignore me. It happens often.
That is herd immunity. I think herd immunity is when we're both vaccinated in the same room and ignoring you.
Well, let's get on that. Let's go. Let's go.
Let's go. Let's go.
Throw a book at us directly.
Coming up at 8 a.m.
I'll hold Lisa's hand.
Patrick Armstrong, Plurimi Wealth CIO. She does not want that. Futures unchanged on the S&P. Yields up 3 basis points on 10s. 155.43. CPI in 1 hour and 20 minutes. Then a big auction a little bit later. This is Bloomberg.
With the First Word News, I'm Ritika Gupta. It's one of the largest economic relief packages in U.S. history. The House is set to give final approval to President Biden's $1.9 trillion package. It's likely to become law without getting a single Republican vote in the House or Senate. Millions of American families will get one-time payments of $1,400. There will also be more unemployment benefits and aid to state and local governments. The Pentagon will keep National Guard troops deployed at the U.S. Capitol through at least May 23rd. The deployment began after the January 6th riot and was set to end on Friday. Last week, the chief of the Capitol Police asked for an extension. The world's two largest jet leasing companies are coming together. General Electric has agreed to combine its leasing business with rival AerCap. GE will receive $24 billion in cash, plus shares in the combined company valued at about $6 billion. The company also will get another $1 billion from AerCap when the deal closes. And in China, producer prices rose last month at the fastest pace in more than 2 years. That adds to the risk of global inflation. The Chinese producer price index was up 1.7% from a year earlier. That raises the prospect that China could start exporting inflation as factories raise prices for products sold abroad. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Expect that face-to-face learning is the ideal, but I don't think that we are ever going quite back to that. What we're seeing is more of this integration of the technology into the day-to-day. We have seen that schools have had this kind of trial by fire in terms of trying to reopen successfully, and that many schools have had to use a system of using different ideas around what it would take to reopen and then pivoting when those ideas did not work well, meaning that some have had to go back and had to close. And that's been a global challenge.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
Start your mornings with Bloomberg Surveillance. Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Extraordinary market day.
This rally just keeps on going.
But there is a tipping point.
The business team you love to watch. Weekday mornings on Bloomberg Television.
I think it's totally done deal. I think it's too bad too, because this is, if the president in his inauguration speech said he wanted unity, he represents all the people, he represents all viewpoints, and yet when we get into a point where we can really negotiate with him, and he had us to the White House to do just that, it falls very, very flat.
Senator Shelley Moore Capito there, Republican from West Virginia, pushing back against a plan that is likely to pass the House later on this morning. Very likely. From New York City this morning, good morning. Alongside Tom Keene, Lisa Abravis, I'm Jonathan Ferro. Here's the price action, up 3 on the S&P. We advance around about 1/10 of 1%. Nasdaq futures coming in just a little bit, not by a lot, with yields creeping higher by 3 basis points on 10s to 1.556%. And in the FX market, euro weaker, dollar just a little bit stronger against the single currency, euro dollar 118.92. He wants unity, Tom Keene. He wants unity within his own party right now, and that's how they got this done.
Well, the unity can be there, but the unity also has trouble, John, with a vote of 51% to 49%. That would be the 17th District of Pennsylvania. Kevin Cirilli joins us now, our chief Washington correspondent. He's not the Joe Manchin of the House, Kevin Cirilli, but Connor Lamb is, I'm sure, going to vote for stimulus as well. How does he deal with stimulus? How does he deal with being in the middle of the Democratic Party?
You know, this is a tough vote for Congressman Lamb in the sense that you go to his district, or you go to Congressman Brendan Boyle's district, and from suburban Philadelphia, and another Democrat. And I think for these two individuals, they're making two very different calculations, but it's an illustration of where the Democratic Party is. For Congressman Lamb, he is crafting himself as a centrist, someone who is much more in the Manchin lane of the party. For Congressman Boyle, he co-sponsored Senator Warren's ultra tax on ultra millionaires. And I raise that because both are from suburban parts of what used to be a swing state. And so fascinating to see the political capital expended from progressives as well as from centrists.
Okay, that's great, but do I need a 4-lane highway coming out of Pittsburgh through the 17th Congressional District? How does Lamb, Boyle, and from sea to shining sea, how do these moderates deal with the coming infrastructure debate?
So I put that question to Senator Shelley Moore Capito, the junior senator from West Virginia, yesterday, and she is the top Republican on the Senate Committee for Environmental Protection Works, which has a huge portfolio that includes crafting a significant portion of any federal highways and other infrastructure projects. And she said that that's really the big debate. President Biden has invited her to the White House over the past couple of weeks to discuss infrastructure, and she said that the president has not put a price tag on the infrastructure project. But clearly, Republicans are going to be focusing on just how much the administration is willing to spend.
2022. What are the Republicans going to run on, Kevin? Do you get the sense that they come out on board with this infrastructure plan, or do you think that the fiscal hawks start to sound a little louder as the months progress?
I think that it's going to be a governor messaging year, if that makes sense, in the sense that it's going to be less about what the divides in Congress are saying and more about what Governor Scott, Governor DeSantis and Governor Abbott are saying. And I raise that point because from the notion of reopening schools as well as getting the economy reopened again, that seems to be the calculation that Republicans are making heading into the midterms.
Hey, Kevin, and this is critical because the reopening started with Texas, Maryland on board, Wyoming, others following now in various different ways. Kevin, do you get the feeling that the administration just can't set the tone on this, that they have no chance of doing that in the months to come?
You know, it started with former President Trump, where he made a calculation, a short-term calculation, that reopening the economy, reopening schools would be a political asset. But that didn't prove to be successful in 2020. It is a calculation that the governors of Texas, Maryland, as well as Florida are making, and it seems to be, right now, a little bit more successful. Just to put it in geographical terms, the mayor of Washington, D.C. has yet to expand reopenings, but just a couple of miles, 4 miles away, Governor Hogan, Larry Hogan, a Republican, a likely 2024 candidate, has moved to reopening. And so there's a lot of division right now in terms of how governors and mayors are dealing with this reopening, and it's spilling into the halls of Congress.
Meanwhile, as we look forward to what's next, I am wondering whether it's fair to cast President Biden as a centrist. A lot of people have been talking about him trying to appeal to all sides and being more of a moderate. You're sort of shaking your head, and that's where I wanted to go. Elizabeth Warren has said personnel is policy. And based on the personnel that President Biden has put in his cabinet, what are we learning?
Well, he's a progressive. I mean, President Biden is a progressive. There's really no other way to look at it. I mean, and look, I think that would be music to a lot of progressive ears, like Senator Warren, though she might have some issue with some of the economic appointees. But look, I mean, if you look at how no Republicans are on board with this stimulus, despite his overtures to them. And as Senator Shelley Moore Capito put it to me yesterday, Senator Joni Ernst put it to me the day before that, this is a president who decided on his crowning achievement in his first 100 days in office that he would not get any Republican support. And that's something that's going to continue onward and have repercussions for his future political ambitions for his agenda.
Kevin, if you heard that noise, it was Tom Keene throwing the bill at the floor, and it was a quite loud noise because it's a big bill. What in that bill?
It's our monthly Amex bill.
Yeah, it's your monthly Amex bill, and that is also the government's monthly Amex bill, evidently, when we passed a $2 trillion plan just months after a different one. I am wondering what inside that plan may come as a surprise to some people that might be interesting that you think you would illuminate today.
Lisa, the issue for Republicans is not that there's money going to schools and money for vaccination distribution. I think the media has really misframed this, to be quite frank with you. The issue is that there's a lot more money for many other different projects. And as a result of that, Republicans are saying, why are we spending more money for projects that have nothing to do with COVID? And that's their argument that has gotten lost in the discourse.
Kevin, good to catch up, sir. Kevin Twitty down in Washington, D.C., our chief Washington correspondent. And here he comes, host of Sound On Bloomberg Radio, weekdays at 5 p.m. Eastern. This whole show's unscripted, apart from that one bit where I have to do that every day. Nothing else. This whole show is unscripted, apart from this little piece of it.
But we make
I have to promo Kevin's radio show.
We make that promo as unscripted as possible all around it as you know,
yeah,
do your thing.
Everything else is unscripted. 5 p.m. Eastern, I'm told. 2 p.m. Pacific time. Let's move on. The Governor of Maryland, Larry Hogan, Tom. I think this is really, really important, the argument that Kevin's making here ahead of next year, that the Republicans, the state governors, they're getting ahead and getting out early. Now, as Kevin made the point, and I think it's an important one, that the former President Donald Trump thought this would be an asset last time around. And of course, we got into some trouble in the summer with the vaccine, Tom. I think they feel a little bit more emboldened to do the same thing again.
Yeah, it's going to be fascinating to see. You know, my focus there on the middle ground, John, is, you know, Joe Manchin gets all the press, and I get that. But there's many micro Joe Manchins out there battling for their job survival out to November of 2022. That's going to be a massive focal point of these debates.
It feels almost unthinkable to think, Lisa, that both sides agree on infrastructure and maybe we don't get infrastructure.
It's hard to see that ever happening.
Incredible.
I mean, there's just too much divergence within the details.
Coming up, Kristen Bidley, City Regional Head of Investments for North Americas from New York City. It's great to be with you, Tom, on bond supply, on treasuries, 10-year today, 30-year tomorrow. Bond yields higher.
80% of the world's trade travels by sea. At any given time, around 5,000 ships are on the ocean carrying containers. Without them, the global economy would collapse.
Many of those containers pass through here, Singapore, the world's second largest port. The industry accounts for 7% of the country's GDP.
But the industry is under pressure. The uneven recovery from the pandemic is creating a shortage of containers where they're needed most and driving bottlenecks at major ports. It sent freight prices soaring.
Since the beginning of COVID-19, these are levels of shipments that we've never seen before.
Chinese New Year marks a seasonal turn for freighters when rates are renegotiated for the next year. Companies must choose whether to swallow the financial hit or pass on the cost. It's a decision that could bring new headwinds on the global economic recovery.
Global markets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lyons in New York. Perspective on the day ahead. Bloomberg Surveillance, early edition. Weekday mornings on Bloomberg Television.
From New York City for our audience worldwide, this is Bloomberg Surveillance live on TV and radio, and here's the price action this morning, shaping up as follows. Bit of outperformance on the small caps, bit of underperformance on the NASDAQ after a massive day of gains in yesterday's session. The NASDAQ lower, weaker, down by about 0.1%. In the equity market on the S&P 500, up by about 0.1%. The Russell of small caps up by about 0.4%. The story today is all about the bond market. 2s, 10s, 30s. Today, $38 billion of 10-year notes. Tomorrow, $24 billion of 30-year supply. Going into that, yields are higher. And I think that's the story this time around. A couple of weeks ago, when we had that ugly 7-year auction, we were all over the place. Tons of volatility in the bond market already. We've had a move of 40 basis points plus over the last month or so coming into this. We've seen the supply slate. If this demand isn't good later, that would be a shocker. Maybe what would dictate it is CPI that comes in about 60 minutes' time. Your yield on a 10-year, 156, on a 30-year, 228. Yeah. Let's finish on this, Tom. Can I finish on foreign exchange, or you want to word on the bond market?
No, go to foreign exchange, please.
Right. Thanks, Tom. Dollar index, 92 handle, euro dollar just south of 119. Tom Keene, 118.95.
John, I think it's a churn today, but I'm going to be honest. I think there's a nice little lift here. The VIX comes in and equities do better in the last 2 hours.
Well, I think it's okay that we're doing all right with yields higher. Up by 3-4 basis points and no big fallout in the market right now, Tom, after a really volatile couple of weeks.
You're just addicted to up 3% a day for the NASDAQ, and, you know, it doesn't happen all like that.
Where's the Dow? Where is the Dow?
The Dow's up 118 points. There I go.
All right, I don't know what that means. What does that mean?
It's good.
That's good.
Yeah.
Up 118. Sounds massive, doesn't it?
Nailed it, John.
Let's get to Remain. Morning, Remain.
All right, good morning, John. Well, Dow futures right now in a little bit of a holding pattern.
Waiting,
of course, on that CPI data. Coming in an hour, of course, waiting on that fiscal stimulus vote. And, of course, that big 1 p.m. auction of 10-year notes. We'll see how that all plays out. That may sort of constrain us from another 3% day here. But right now, we are seeing a lot of moves to the upside on some individual stories here. Of course, GE, Larry Culp, of course, finally making good here on that strategy to continue to lean out GE. Of course, that deal to offload the air leasing business over to AerCap. A big deal for GE. That's $24 billion in cash in its pocket and presumably in the pockets of its debt holders. Another $6 billion or so in equity in the new venture. So it'll actually at least participate in any upside that AerCap gets out of that venture there. Boeing actually rallied hard yesterday and up again here in the pre-market, really doing well here. Remember, we're starting to see that backlog go up. It's outselling Airbus, at least in terms of an order basis for the first time in about 14 months. There's a lot of signs here that that company is finally turning around. A lot of it for the 737 MAX, not necessarily for the larger planes like the Dreamliner, nevertheless still somewhat encouraging here. And Apple rallied hard, not really getting a whole lot of pop here in the pre-market. Dan Ives out here kind of defending his bull case, a bull case that he's had for quite some time. He's already looking well ahead beyond the iPhone 12 now to the iPhone 13, which I didn't even know was a thing. But he says, look, the super cycle is alive and well, and that Apple really is going to continue to fire on all those cash cylinders that we've come to know it. Flip up the board, Tom. I want to get to your meme stocks here. GameStop, of course, had a wonderful day yesterday. And there you go, Tom. You missed your entry point.
Okay, but Romaine, you guys are expert on this on the close. Is GameStop going up for the same reasons it went up the last time?
No. So the short squeeze that we saw last time that took this to just incredible heights, you're not really seeing that. The short interest is about a third of what it was back then. So maybe that could be a factor. But now you have a lot of optimism here about Ryan Cohen and his involvement. Of course, he was already an investor. He was already on the board. Now he's part of this committee that is apparently going to help move this company to more of an e-commerce type of business model. What that all means, we don't know, but there was a lot of faith in him. Remember, of course, his sort of claim to fame is what he was able to do for Chewy. I'm sure you're very familiar with that company there, Tom, doing quite well out there.
One of our viewers and listeners, Romaine, emails in. Taylor says, ask Romaine, is it Adidas or Adidas?
Okay,
Which is it, Romaine?
Well, first of all, Taylor's not awake at this time of morning. And second of all, it is Adidas, as I like to say. Caroline Hyde taught me that, Adidas.
Well, she's wrong. It's Adidas.
She had to teach it to you because you knew that it was already Adidas. So there you go, Romaine.
I love the dynamic on the afternoon show. I look forward to it a little bit later this afternoon.
There's quite a dynamic on this show, too.
Romaine taking digs at Taylor Riggs for what time she wakes up in the morning.
Quite a dynamic. How about that description?
Thank you. Tom Keane. Big equity market move yesterday. Was in big tech.
Big equity move, and we've got to reset, and we do that with a single sentence out of the work of Kristen Bitterly at Citigroup. I love her note because she says, forget about the bow tie pontification of the future. It's about what do companies deliver. That is a key item right now. And I would point out, Kristen, what I'm really looking at is Amazon on April 30th, 2021. What are we going to see when they actually deliver earnings?
Yeah, so I think this is the big tug of war, right, that's going on in the market. So on one hand, you have essentially COVID cyclicals, COVID defensives. That was the name at Citi that we basically said to COVID losers, COVID winners, and this mean reversion that's going on in the market that's really dominated the market for the past several weeks. And then you also have this element of, okay, these big companies that have continued to deliver on earnings, that have really impressive revenue growth, is there a chance that the big only get bigger? And so from there, I think right now we're in a position that, yes, these COVID defensives, within those sectors, you're going to have some that aren't going to continue to grow at the same pace. But there's a couple of companies, and Amazon is one of them, that when you look at their percentage of market cap versus their contribution to earnings, they're actually contributing more to profits than they are to market cap. And so if they continue to deliver, we could see continued strength.
Well, dovetail your work with people who are afraid with the work of, I know you're on speaking terms with Tobias Lefkovich. I mean, can you add cash today into the market? Can you acquire shares this morning?
Yes, absolutely. So I think one of the challenges, look at what we're talking about. We're talking about inflationary concerns. If you're worried about inflation, then cash is punitive. We're also looking at, it is impossible to time the market. So if you miss the 5 best days year to date, you basically have a -7. It's a 7% hit to your overall return. If you take that to all of last year, you would have gone from a U.S. equity return of plus 18% to minus 18%. These markets are actually very difficult to understand the price action that's going on. Even look at what happened yesterday. So there are areas that on a relative basis, from a valuation standpoint, are attractive and they serve a really good purpose in the portfolio. So I would point to global dividend growers to get international exposure. I would also point to global healthcare, which is actually trading from a relative PE standpoint at 10-year lows versus global equities. So there are these pockets that do both things, right? They actually insulate your portfolio from duration and inflation, and also from a valuation standpoint are attractive.
You know what the ultimate barbell stock has been, Tom, over the last month or so, the last 12 months for that matter? The Walt Disney Company. Just the ultimate barbell to being closed down and reopening. And I just wonder, Kristen, whether that's the ultimate strategy for the broader portfolio, just to be barbelled here and not try and time it, not trying to time the rotation back and forth for the next 12 months.
Absolutely. I think that a diversified, actually, whether you call it barbell or whether you're saying, okay, let me make sure I understand where I have outsized risk in the portfolio. What we've been doing is, so in these COVID defensives, we've been pulling back over the past couple of months, right? And we've been allocating to COVID cyclicals. We've been balancing out kind of the US-centric exposure with some of the international exposure, where we see better opportunities, both from a valuation standpoint as well as a mean reversion. And then you have participation in the economic recovery, because we know, as you said earlier, the data is going to get better, right? We are going to see a reopening. 15% of the global economy is still shut down. You want to continue to participate in that. And you also want to realize, like I said earlier, cash is punitive. You want to protect your portfolio against what we know, whether it's temporary or more sustained, what we know is going to be an increase in inflation short term.
Is the 60-40 portfolio dead or just sleeping for another couple of years until we normalize rates?
It would be really bold to say it was dead. So I'm going to go with, the 60-40 portfolio now is a 70-30. You just have to think about, what are you achieving with your portfolio? Generally, it's some type of diversification, it's yield, it's growth. And that 40% is not giving you the yield that you want, right? It's not giving you the income that you need. And so shifting that portfolio to 70-30 is something that we've been recommending. But here's the thing is, so we talk about volatility in the market. Volatility you can monetize. When we see days like we've seen over the past couple of weeks, you can actually sell volatility that gives you the ability to buy into the market at 10% lower than where it's currently trading and earn double-digit per annum yields. So this is a really smart way that we're seeing people who have been in cash sitting on the sidelines add exposure, augment yield, and also not add duration to their portfolio.
Kristen, always good to hear from you. Always smart, always sharp. Kristen Biddley there of Citi Private Bank. On a story of this market so far, really difficult to time. I think that's the takeaway, Tom.
Well, I loved what you said about barbell, John. We try to keep track. There's a lot of other people out there, but I'm really going to shout out John Golub at Credit Suisse, who I think was way, way out front on the concept of barbell and having the courage to hold tech, even with all the turmoil and rotation.
Well, who wins the recovery? Answer one. Who wins the cycle? Answer two. And they're often not the same answer, Tom. And that's the issue that I think the likes of BlackRock, the issue that Credit Suisse have got with the outlook beyond just the next 12 months.
Well, I love where Kristen Bitterly is. What are the earnings actually going to be seeing? You see that with Adidas today with a real shift in their optimism.
He's just going to say it as much as he possibly can.
That's fine. I'm just going to smile through it, Lisa.
Honestly, I think that one of the most interesting things is Kristen Bitterly just showed who's buying the dip. Everyone. I mean, this is the reason why people are buying the dip, because they see a sell-off and they see an opportunity to get in more cheaply. I just want to throw out this statistic. Yesterday was the second best day for the long bond in 4 months. It was the best day for the NASDAQ in 4 months. Just, John, the correlations are dramatic.
Deeply correlated.
Yeah.
When does it break down, if at all?
It's a good question. And at a certain point, are the same people on the same sides of this trade just whipsawing in either direction, trying to get better value?
Trade. Yeah. Let's be clear about that. It's all been one trade. That's why we've got the likes of Tom Keene finally interested in an auction a little bit later this afternoon on 10s and 30s tomorrow.
Yeah, he's a rate strategist.
Everyone has become a rate strategist, Tom.
Yeah,
it's been a story the last couple of weeks.
Come on, to be honest here, within the nuances and the mathematics of those announcements, and with immense respect to Bloomberg world leadership and bond coverage, that would be where Abramowitz was weaned. Lisa, the bottom line is there's going to be all this mumbo jumbo, and the question is, does anybody show up at the margin? And the answer is they will.
Yeah, they showed up in force yesterday. But again, and John, this is your point, it's one thing to show up in force for 3 years. It's another for 10 years.
It is. I just think it would be such a shocker, given the move that we've had over the last month, not to see that demand come back in with yields close to 160. It'd be a real shocker. Coming up in the next hour, Jared Bernstein, U.S. Council of Economic Advisors. Looking forward to that. You got something else to say?
Yeah, Tom.
Should I look at the callable, the Adidas zero coupons of 2028?
Value add this morning on Bloomberg Surveillance live on TV and radio with Tom Keene talking absolute nonsense for the next 1 hour and 20 minutes. And then it continues on Bloomberg Radio at 9 Eastern.
Throw a buck.
You can do that on radio or join me on TV. This is Bloomberg.
It's a tough choice.
With the First Word News, I'm Rishika Gupta. The House is sent to send that $1.9 trillion coronavirus relief package to President Biden for his signature. The measure will provide an economic boost that will last long after the $1,400 checks start arriving this month. House Democratic leaders expect final passage this morning. The measure also includes supplemental unemployment benefits, an expansion of the child tax credit, and aid to state and local governments. BioNTech says it could have the capacity to make 3 billion doses of coronavirus vaccine with its partner Pfizer next year. That would make their pioneering shot far more widely available around the world. BioNTech and Pfizer have committed to making 2 billion doses this year. Bitcoin's rally this week is on hold. The price of the world's largest digital currency fell after briefly climbing past $55,000. There's speculation whether Bitcoin will be able to again hit the record of just over $58,000 that it set last month. Bitcoin's price has been bolstered by growing talk of institutional interest. And the ceasefire in that big trade war is working. Once again, China is the biggest customer for U.S. farm products. According to the Wall Street Journal, American farmers are exporting record amounts of crops and meat to the Chinese, more than they did before the trade war. Global news 24 hours a day on air and on Bloomberg Quick Take. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishika Gupta. This is Bloomberg.
Women leaders were actually better at controlling the deaths from COVID-19. Do you think out of this pandemic, we'll see more countries be willing to elect female leaders?
When we look at women leaders, we tend to project on them baggage that they shouldn't bear.
Women are given an opportunity when no one else wants to do the job.
Women had a very clear objective. They wanted to save lives.
The women leaders, if you look at their careers, have also built up a level of trust.
In fact, women have to be better at communication in order to be elected as leaders, whereas this doesn't hold true for men.
We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women is not only the business of women, but men have to be part of it.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
I think what we've seen during this period of time is that
communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Pickup in real rates is what's driving the dollar, it's what's driving the concern in corporate spreads, and that's when the Fed, I think, will start to worry. So it's that play that markets are looking at now, the indecision between how the Fed's reaction function plays out against how much of a pickup in inflation we're really likely to see it.
That's the big debate right now. That was David Page, AXA Investment Manager's Head of Macroeconomics from New York City this morning. Good morning. Alongside Tom Keene, Lisa Bramwitz, I'm Jonathan Ferro. Here's the price action this morning, this Wednesday, as we count you down to a CPI print in America. The S&P 500 almost totally unchanged. The NASDAQ comes in 32. Not a substantial move lower on the NASDAQ 100, a huge move higher in yesterday's session. In the bond market, yields are up, though, up 3 basis points going into this auction a little bit later this afternoon, 155.78 on 10s. And in the FX market, Tom, really quite stable on the euro now, in and around 119 and 118.95.
Lots of market stories here, and also we're hearing corporations with the beginning of that, well, maybe end of pandemic joy out there. Some of it is, on earnings, on the income statement, and some of it is transactions and combinations, including what Lawrence Culp is doing at General Electric. We are thrilled to bring you this morning Karen Ubelhardt, where they work with the Singapore Sovereign Wealth Fund, where they work with Lehman Brothers for years, holding court at Bloomberg Intelligence, leading all of our industrial coverage. Karen, was this transaction a surprise?
I thought eventually down the road we might see this, but I certainly didn't expect it as soon. But, Larry Culp has surprised us on other things, such as the sale of biopharma. I think he really wants to fix the financial condition on an accelerated time frame.
Well, that's a Danaher kind of way. Karen, if I look at this, to me, the idea is the focus in America of Airbus, of Boeing, the leasing of airplanes. It just seems to be a regulatory nightmare in Washington. How will the Biden administration greet this transaction?
I think the antitrust environment is clearly probably more difficult under Biden, but I did defer to our aviation analyst expert, and he did seem to think that the leasing business was quite a fragmented business, and there would not be a problem on a global basis. Basically, it is a complementary fit. AirCap is stronger outside the U.S. GE is stronger inside the U.S. If you lay them together, it looks good. The mix of fleet is complementary to a large part as well. So I will have to do a little bit more work on the antitrust, but at first glance, it looks like it should fly.
Yeah. Well, Karen, you said that you were sort of expecting this type of transaction, but the timing was a bit sooner than you had expected. Do you have any insight or expectations about why they decided to speed up the process? Is it because of financing conditions or an expectation of yields going up?
I mean, given where we are in the aviation cycle, I kind of thought, why now? But the way they've structured the deal, GE is essentially going to own 46% of the company, so they will participate in the upside in the commercial aviation business, just not as significantly. I think with the surprise of COVID and what it did to their strongest business, GE's timeline was stretched out in terms of improving the financial conditions. And, Culp took a big step by selling biopharma to pay down a chunk of debt. And, the earnings are going to come back very slowly in aviation. And, so the timeline to get the financial condition really stabilized is going to be a lot longer without the earnings from aviation. I think he just decided, we've got to fit. I don't know who approached who, but this is a way we can participate in the upside and deal with our financial condition in an accelerated
Karen, I just want to jump in as a headline crossed on a Bloomberg. American Airlines boosting the size of its junk bond sale to $6.5 billion. If you were worried about financial conditions, the ability to come to market and offer debt, there's an airline coming to market, Lisa, and boosting the offering to $6.5 billion.
Yeah, there's plenty of demand for this debt, despite the fact that the volume of people actually flying is incredibly low, and the fact that American Airlines has piled tons of debt on their books already. $6.5 billion. Plenty of people still eager to
The turnaround in the last 9 months has been phenomenal. And Karen, what shocks me about this deal this morning, what are we talking about in cash? $24 billion, right, for GE?
Yeah.
Okay, $24 billion. The market cap at one point last year was what, $50 billion? That's phenomenal, Karen.
Yeah. Yeah, I mean, he's done, he's done a great job of generating cash and surprising us in terms of addressing what everybody's worried about, which is their their debt, their pension, the whole balance sheet side of the equation. Earnings will turn in most of the businesses this year. We won't see much out of aviation, but we certainly will see improvement. And the overhang is the balance sheet, and he's going to take a big chunk of that concern away with this deal. It's a lot of cash.
What's left to monetize, Karen? Just a final question. What is left to monetize, do you think?
There really isn't much anything big left. I mean, the 4 businesses he's in, he wants to stay in. He'll wind down the rest of GE Capital, and there's nothing big there to sell. I think there's pieces in power, the power services business, the grid business, some of the other units, but the big stuff is done. And of course, he's still got, a remaining Baker Hughes ownership that he can get through as well, and that's about $5 billion. So he's still got some money, but the big stuff's done.
The phenomenal Karen Obelhart of Bloomberg Intelligence. Karen, always great to catch up. Appreciate your patience with us as well as we try and wrap through a couple of stories. And putting these stories together, Tom, it's just the story of the last 12 months and the huge turnaround we've seen in the value of assets, in the value of bond markets, and the ability of these companies to come to market, whether they're doing a deal, whether they're coming to market and offering debt, to get a better price.
I would suggest, John, that so much of this is what is not discussed, which is just a nation's confidence, maybe a business confidence, maybe a Bloomberg confidence, and that people are waking up and they're seeing wherever they view GDP, they're waking up and seeing the medical news that we're seeing, and it breeds confidence from the C-suite out across the nation.
Just to give you more color on this American Airlines deal, so they boosted the junk bond offering to $6.5 billion from about $5 billion. There also is a $2.5 billion loan associated with this particular offering as well. So if I'm doing the calculations correctly, we're talking about a $9 billion deal on top of all the other debt that it's raised. And really, John, my key question is how much are companies trying to expedite some of their bond sales and their debt sales now ahead of interest rates rising, and as people get cool a little bit on how much of an opportunity there is in the lowest rated debt? Not saying it's going to be Armageddon, but in terms of upside, in terms of gains beyond just coupon clipping versus the risks in some of the lower rated tranches, including, for example, American Airlines that has a CCC rating from one of the rating agencies.
There is a lot of supply coming to market this week from the Treasury. We talked about 10s a little bit later. We'll have 30s tomorrow. I believe on the investment grade side of thing, the weekly total could be anything between 40 and 50 billion. And then you've got the high yield story as well. There is a ton of debt coming to market. And I think this is the pressure on the Fed, Tom. For the Federal Reserve, they can't allow financial conditions to tighten. They can't allow spreads to widen too much. It hasn't happened yet, but I think this just really underlines the fact that they haven't got the ability to let that happen just yet before this economy really gets roaring and gets roaring back to business.
Yeah, the phrase is degrees of freedom, and there's no question they have less degrees of freedom, but they've also got the might of the American economy. We underestimate, you can see in the vaccination size, John, how big America is important.
8:30 Eastern Time, 34 minutes away from a CPI print in America. Coming up ahead of that is Patrick Armstrong of Plurimi Wealth, the CIO. Your equity market up a single point. Heard on Bloomberg Radio, seen on Bloomberg TV. This is Bloomberg Surveillance.
We will start soon delivering also COVID-19 vaccines once all permissions have been granted. We are in discussion with Ministry of Health, with current logistic partners in different countries. So we're looking at Southeast Asia right now on delivering COVID-19 vaccines. We are also setting up already on the African continent in already one country and looking at the second country to expand.
We're in the beginning of 2021. What are your biggest worries?
The inequality of the current world environment. It's troubling, and I think it's actually getting worse, which is a big challenge.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
It's such an interesting new world.
The world is changing.
For us, it's not about being first. It's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. It should just be something that people do.
The 1.9 trillion U.S. stimulus. We think that will lift and global GDP growth.
We're about to have a $2 trillion stimulus, so the propensity of consumers to spend is very high.
Inflation is going to be a burst coming in the next 12 months, and then it's going to calm back down again.
This is not a Fed that's going to hike upon a falling unemployment rate, and it's not a Fed that's going to hike when they start to sniff out inflation. They are going to wait.
Fed policy inevitably at some point is going to shift.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrell, Lisa Abramowitz, and Tom Keene. A simulcast on radio and TV. Inflation studies in 30 minutes. We'll have that for you. Michael McKee giving us great assistance. But right now, it is the sum of all our parts. And, John, it is good news, the visibility to an end of pandemic, and how that folds into our economics, our finance, our investment.
It's such a unique moment because everyone agrees the data gets better. Where the disagreement is what happens after that. And that's what I find fascinating, how markets will respond, how policymakers will respond to that better data, that higher inflation in the months to come.
Two stories this morning. Lisa, let me go right to you and your bond and corporate expertise. Not only do we see American Airlines with a balloon deal, full disclosure, folks, I don't understand it, but also two more government auctions, full disclosure, folks, I don't understand it. Lisa, discuss.
Well, basically, you've got a lot of people selling debt right now. You've got a government that needs to plug a widening deficit. You've got companies that are looking to get in while the getting is good. The idea that interest rates are going to probably rise from here, and that frankly borrowing costs could be as low as they're going to get. If you take a look at all-in yields for high-yield debt, you're seeing them at the highest level going back to December. So there is this feeling perhaps we're moving into a new regime. But look, Tom, right now it is a great time to borrow, and you're seeing that the government, even after rates have risen, seem to be having a pretty easy time finding buyers for those treasuries.
And John, into the markets off of what Lisa says, it's about change behavior and how chief financial officers deal with the optimism, including a $1.9 trillion stimulus.
They've been able to borrow, Tom. They've been able to survive. Do they start to invest more? We're starting to see some deals this morning. Did they start to hire more? And that's what this administration wants to see. And that's why this administration is going to stick with it for a long time. And that's why this Federal Reserve will stick with it for a long time as well. That's why this moment is so different to what we've seen before. They are applying the lessons learned from the previous cycle to this cycle, following a shock that's very different to what we've seen before.
John, a seismic response from our listeners and viewers out on Twitter. Thank you for the emails. And John, they all agree the story of the morning is Adidas and what they're doing with a better outlook. And John, I look at it. I'm sorry, really? I look at Adidas seriously, and I say, are there going to be many more Adidas headlines to come from hundreds of companies?
One thing I know for sure is that I won't be the first anchor to walk off set so far this week. I understand someone else has done that already.
Well done.
Maybe I might do that too. Do you want to get a market check? Do you want
Let's
to check
do a
the
market
price
check.
action?
Let me start in, John, and you pick it up. I've got red and green on the screen. The VIX comes in critically. The VIX at a 23.29 gives me good news. I'll go to foreign exchange and see churning there. I would note, John, euro stronger against Japanese yen. That's maybe something for later this week.
Yeah, euro weaker against the dollar, though. Euro dollar just south of 119, and $38 billion of 10-year notes coming to market later. Lisa been leading with that all morning. Tom, ahead of that, yields up just a little bit. We head higher by 3 basis points to 156.
The conversations here are incredible, and I don't want to make a joke about this because John nailed this. It was a year ago, 2 years ago. Everybody does a 12-31 analysis, and Farrow was apoplectic wearing his Adidas sneakers like 2 years ago, and he said, you got to reset in March. We're going to reset in March, given the good news on the pandemic with Patrick Armstrong of Plurimi Wealth Management as he resets his calls for the year. Patrick, what have you changed in your view?
Views from the start of the year, I've become more convinced that the Fed's going to let the 10-year yield rise a bit. I don't think they're going to let it get out of control. But Jerome Powell last week was unequivocal that he's not going to be raising rates. And I think the 10-year took the message from that is that that's actually a risk to the longer duration bonds, because if you've got a Fed chairman who's not going to raise rates once he starts to see inflation, that just pushes up the longer end of the curve. And that's something I think he'll probably have to evolve on his messaging. But I do think the path is higher for 10-year rates from here. We've got a very strong reflationary backdrop. I came into the year expecting that to be there, but it's strengthened probably beyond what I expected coming into the year as well.
Patrick, we've been told how the chairman and the Federal Reserve will respond to this. I want to understand what it looks like in April, May for you. Maybe back end of May. We start to get these CPI prints, the base effect really kicks in. We tick higher, kick higher. We're reopening. GDP's roaring again. How do you think the market responds to that? How do you think perceptions of policy recalibrate at the back end of May as well?
It's going to come down to Powell's messaging a lot, but right now people probably can still kid themselves that inflation is non-existent, and it has been non-existent. But I think month on month, as we get into the summer months, it's going to become more apparent to everyone. And all the asset prices are already pricing to inflation. If you look at all the commodity prices in September, if you look at lumber, steel, corn, wheat, oil, they're all up 30 to 70%. If you look at prices on the ISM surveys, manufacturing and services prices are both going up. So it's something that probably people will still be surprised by the summer, but I don't think they should be. We're in the midst of a reflation of the economy. Higher prices are going to be part of that. And it's not completely discounted in markets yet, in my opinion.
So what's your game plan, Patrick, when that market move begins?
Well, it's begun already. And my game plan is in our bonds. I want bonds from banks because bonds, inflation's toxic to bonds. So the one part of industry that benefits from higher interest rates and a steeper yield curve, you get better fundamentals for profitability of banks when you got an interest rate margin. So I like that. I like emerging market inflation-linked bonds. And people are worried about a strong dollar being a negative for emerging markets. You've seen that over the last few days. But I think in a reflationary backdrop, especially if you're a commodity-producing country, you're going to generate inflation there, you're going to have growth there, and you're getting real yields on inflation-linked bonds from commodity producers of 3% above what's higher than the developed market inflation right now. So that's an equity-like risk premium with a bond investment.
I think it's important to parse out inflation risk versus just higher rates, right? I mean, recently we've seen rates going up, not because inflation expectations over the longer term have gone up so much, but simply because people don't expect the Fed to come in and buy as many. We're going to get real growth, and so there should be a higher yield. Patrick, at what point do you start to take a look at a 2.07% 10-year inflation forecast and say that's too low or that's too high and make a bet on that and how that coheres to where yields are?
That's the other thing we're doing in our bond positioning right now. So we're buying inflation-linked bonds in the developed world, and we're shorting traditional bonds against that. And that's one way you're essentially zeroing out the expected inflation, the break-evens on that. So I don't think 10-year yields are going to run out of control, so I'm shorting them in case they do. But that's one way where you can just get the pure inflation expectations is by owning inflation linkers, shorting conventional bonds.
Okay, this is actually really important. Do you get the sense that other people are doing the same and that this is one of the things that has driven the record short position that we have seen of late in the 10-year Treasury and part of what might be whipping around the yields versus actual real rate expectations or even inflation expectations?
I think that's part of it. And I also think perversely that it's another way, because it's correlated to everything as well, is that the biggest risk if you're owning a growth company is the higher rates right now. That's what's driving markets. When the growth stocks are selling off, it's been triggered by rates recently. So actually by shorting a treasury, you're almost hedging a growth portfolio as well. So I think there's a lot of different players shorting treasuries, and with yields so low, it's not a big cost to put on. The rates can move a lot higher. I don't see how they move massively lower given the inflationary backdrop.
That's a correlation to fixed income, Patrick, but seriously, here, Adidas out with a great headline today. Does revenue growth matter?
Revenue growth always matters, obviously. It's something, it's just a product of what we're going to get in the economy as they reopen, though. It's the cyclical companies that have been low growth. When you've got such a strong economic growth as a tailwind, you've got the secular growth companies growing as they always do, but I think you're getting cyclical growth as well. So the growth's a little easier to come by now.
Patrick, we've got to leave it there. Patrick Armstrong, Plurimi Wealth CIO. An important point here, Tom, that an insurance policy is very different to a conviction trade. And I think that's what you have to draw a distinction between when you take a look at these markets.
Really, really well said. And the idea of insurance policy has not worked out for people in the last year. Again, Lori Calvasina, brilliant on that. And the people caught in the middle, John, have really been left behind. That's important. John, you know where I'm going to be at 3 p.m. after the acclaimed surveillance map.
Where's
the
that?
Tots are playing Dynamo Zagreb of Croatia, I think it is.
You'll be watching that, will you?
I'm going to be. Is that like a close game? Like, do the major players play?
Look, he knows it so well.
Some of the major players will play.
I'm asking. I'm serious.
I'm just shocked you brought that up. I thought you'd bring up Adidas again.
No, I'm going to bring it up because Gareth is going to be out there with his Adidas X19.1 cleats. And, you know, let's be honest, Gareth says Adidas, not Adidas.
I think he says football boots and not cleats as well. DAX is at a record high. The DAX is at a record high, Tom, just for... If you want to talk about the stock, the DAX is at a record high.
What does Gareth get paid to wear Adidas cleats?
I don't know. You'll have to check in with his agent. I imagine it's a lot of money, Tom.
A lot of money?
I imagine it's a lot of money.
Is Dynamo Zagreb any good?
Not as good as your Tots.
Okay, thank you.
I'm looking right now
That's what I need
at the NASDAQ, which seems to be going deeper into the red.
Lisa,
as
can you imagine what life was like before you?
So was the show.
It was just him and I on radio
it just
together
would have been lost
for years.
Well, I mean, it is interesting to see the NASDAQ heading down to lows
and
right
then
now.
I could walk off set because it was just on radio. But now it's on TV as well. A little bit later this afternoon, after we get that CPI print, we get a ton of supply in the United States of America.
It's important, seriously.
Very important. Then a 30-year issue coming up tomorrow as well. And 8:30 Eastern, I think, setting the tone for this market. The CPI print coming up a little bit later in about 20 minutes, Tom.
Yeah, we're going to see the CPI print, and there's all the different slices of it. Michael McKee likes something, Farrow likes something, Lisa likes something. I'm looking at the price inflation of Adidas shoes, and in America, they're pretty good.
Oh, dear Lord. Seriously?
Bloomberg Terminal subscriber writes in, I haven't even opened the email. It just says, who is Gareth? Coming up next, Jared Bernstein, U.S. Council of Economic Advisors.
He knows
member.
Gwyneth.
I'm looking forward to that conversation. A little bit more than this one. From New York, this is Bloomberg Surveillance, heard on Bloomberg Radio, seen on Bloomberg TV, with equity futures down 2 on the S&P 500. Your equity market, the direction could be dictated by what happens in about 20 minutes' time. Inflation in America. This is Bloomberg.
With the First Word News, I'm Ritika Gupta. The world's 2 largest jet leasing companies are coming together. General Electric has agreed to combine its leasing business with rival AerCap. GE will receive $24 billion in cash, plus shares in the combined company valued at about $6 billion. The company also will get another $1 billion from AerCap when the deal closes. It's one of the largest economic relief packages in U.S. history. The House is set to give final approval to President Biden's $1.9 trillion package. It's likely to become law without getting a single Republican vote in the House or Senate. Millions of American families will get one-time payments of $1,400. There will also be more unemployment benefits and aid to state and local governments. The Pentagon will keep National Guard troops deployed at the U.S. Capitol through at least May 23rd. The deployment began after the January 6th riot and was set to end on Friday. Last week, the chief of the Capitol Police asked for an extension. In China, producer prices rose last month at the fastest pace in more than 2 years. That adds to the risk of global inflation. The Chinese producer price index was up 1.7% from a year earlier. That raises the prospect that China could start exporting inflation as factories raise prices for products sold abroad. And hackers say they gained access to 150,000 surveillance cameras inside hospitals, companies, police departments, and schools. Amongst those whose footage was exposed, carmaker Tesla and software provider Cloudflare. The video was captured from Silicon Valley startup Verkada, which collects security camera data. Verkada says it's taking steps to prevent unauthorized access. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ruchika Gupta. This is Bloomberg.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment. The politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
Particularly, sort of the technology landscape have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
This is a market that
over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
On inflation, it's something that, as the president has said, as Secretary Yellen has said, we are monitoring carefully. Our belief has been from the beginning that the risk of doing too little to help American families outweighed the risk of doing too much.
That was Bharat Ramamurthy there, the White House economic advisor on a monster plan down in Washington, D.C. From New York City this morning, good morning. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. Here's the price action. We look like this in America on the equity market. Equity futures come in a couple of points, call it 3, down about 0.1%, Tom. Yields are higher by 4 basis points to 156.30. A CPI print, Tom, about 12 minutes away. And several hours after that, we get some supply.
That the labor economy, whether it's Secretary Yellen and her codified word slack or what Dr. Bernstein's done for years, labor is front and center for this Biden administration.
Very much so. It is a unique moment. So let's have a conversation with Jared Bernstein, U.S. Council of Economic Advisors member. Jared, we appreciate your ongoing transparency off the back of a huge effort to deliver a $1.9 trillion plan. Let's start with this, how unique this moment is and why a unique approach is required.
Yeah, it's a great question. The American Rescue Plan, which we expect to pass the Congress any moment now, is certainly one of the most consequential and one of the most progressive pieces of legislation in recent or even distant American history. We're talking about getting $1,400 in checks out to almost 160 million American families, and those checks start going out the door days after signage. In fact, speaking of deadlines, in just a few days, about 11 million Americans risk the potential of losing enhanced unemployment benefits if we don't extend them, which is, of course, at the heart of the American Rescue Plan. And then there's, of course, the crucial issue of finally gaining control of this virus, producing, distributing the vaccine, getting shots in arms so we can get to the other side of this crisis and launch a robust, reliable, and inclusive recovery.
The shock is different, yet we have been conditioned by the previous cycle, and the lessons learned from the previous cycle are being applied to this one. Now, Jared, that's something I'm struggling with. We've been conditioned by the previous cycle that we need to do more because the recovery was so shallow. If the shock is different, why are the lessons that we've learned previously pertinent to this one?
I think the critical lesson there is the one you've said, and I don't think that, if anything, the magnitude of the shock would really emphasize that lesson, which is that our tendency has been to do too little, not to do too much. You know, when I came up in this business, there was no such thing as a jobless recovery. You had these more V-shaped dynamics, and, you know, a bunch of folks were furloughed from the factory, the shock went into the rearview mirror, and a bunch of folks came back. Now we've had these sluggish, jobless recoveries that often set up an expansion that underperforms. That's not the way Joe Biden wants to see his administration get out of the gate. And with the American Rescue Plan behind us, we think, again, especially with finally getting this virus behind us, is so critical to launching not a wait and see, not an on again, off again kind of recovery, but a reliable recovery that can be durable.
Dr. Bernstein, good morning. Thrilled to have you with us today. You did a frontline interview in the heat of the financial crisis talking about you guys inheriting a recession. Your critics will say you are manufacturing a boom economy with this stimulus, and they will then go on to say you are manufacturing new higher inflation. Defend the administration.
Sure. Well, first of all, I don't hear too many of those voices outside of partisan Republicans. Even some economists who've been worrying about overheating and critical of the magnitude of the package have recognized the support and recognize and support the importance of rescue and relief. But let's talk about your inflation question. I want to tell you about the 3 S's. Okay, you ready for the 3 S's? Spending, slack, and savings. So, spending, by which I mean spend out. The spend out of the American Rescue Plan does not occur in 1 month or 2 months. It is true, and it's very important, that the checks and the unemployment insurance, the enhanced benefits, get out very quickly, right out the door. but the plan itself spends out over a couple of years. So some of the folks on kind of the overheating team don't recognize the spend out pattern. And then there's slack, okay? There is still way more slack in this labor market, Tom, than I think your question implied. We have an unemployment rate for African Americans of 9.9%, 8.5% for Hispanics, 9.5 million jobs in the hole still. That's deeper than the deepest part of the Great Recession. And then, of course, savings, the other S. Some of these benefits, some of these parts of the American Rescue Plan will be, at least initially, saved by people who will then use it to meet accumulated debt, say from rents and mortgage forbearance. Okay. And that, too, puts downward pressure on price pressures.
But, Jared, we've had a number of economists come on and say that that was actually perhaps a bit overstated, that actually consumers are not as indebted as they have been in the past. There isn't as much debt to pay down. That is one argument. But there's another argument saying, yes, the depth of this crisis was deeper in some ways than the last crisis, but it was very different, and the bounce back has been much faster than economists are predicting. What makes you confident that that isn't a sign that we're going to get some sort of growth that was going to be turbocharged, and the inflation also with it, that will be a very different picture than what we've seen in the past 10 years?
Yeah, well, first of all, let me talk about the debt issue. And for that, you might want to consult with our good friend, Mark Zandi, who's been tracking a very specific type of debt, which is the type I've had in mind. And that's for people who've been benefiting from rent moratoriums and mortgage forbearance. This type of debt is, I think, quite escalated right now. And it's precisely the type of debt, and there's some evidence for this, that folks are using these benefits to spend down. Eviction risk is still upon the land. And the American Rescue Plan addresses that head on. Now, you talked about the pace of the recovery. Every forecast I've seen has a couple of things common to it. One is that we will grow above trend this year and next year, and that is precisely the kind of growth rates that the American Rescue Plan is supposed to set off, again, in a reliable sense, because we finally put the virus behind us, we've safely opened schools, we've gotten families and businesses the relief they need.
Yep.
But these forecasts also show heat, yes, heat in terms of interest and inflation rates, but not overheat. And I think that's the key.
Jared, before we let you go in about 30 seconds, if you can, something you've been fighting for a long, long time will not be in this bill that goes through the House today. It's a higher minimum wage. What's the administration's message to progressive members of the House who didn't get what they want either?
President Biden was disappointed by the ruling of the Senate parliamentarian to keep this out of the bill. However, that doesn't mean he's at all putting this fight behind him. And in fact, he continues to be extremely committed. I got an email this morning to that effect, and I won't divulge what it said, but I will say that the administration remains...
Feel free.
The administration, our administration remains absolutely committed to finding a path forward on a $15 minimum wage, and that's going to be work that you'll hear a lot more about going forward.
Jared, hopefully we'll hear from you soon. This is truly a big effort down in Washington, D.C., and it deserves transparency, and I'm pleased we're getting it from you today. Jared Bernstein there, the U.S. Council of Economic Advisors member. Tom Keene, 5 minutes away from a CPI print in America.
It's so important here. The change, the growth, the percentage amount, John, versus the level where we are. It'll be interesting to see where that is in 12 months.
Coming up, Mark Howard of BNP Paribas on this fiscal plan in Washington, on the outlook for growth, the outlook for inflation. Futures come in a single point on the S&P 500. Heard on Bloomberg Radio, seen on Bloomberg TV. This is Bloomberg.
Just COVID,
But just it's COVID related, but it's also stress related to job. I think COVID probably just sort of was the nail in the coffin for a lot of us. Having the destruction room here is also a very healthy outlet. I do not encourage it as something that we do on a regular basis, but I do find that when people come in, being able to break plates, being able to write out whatever's on their mind and letting it go, being able to just take out their frustration and their anger.
Come to a place like this and be able to break some stuff and release some tension without going to jail.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
I have asked the Securities and Futures Commission and the Hong Kong EX to work together to explore the viability of our own Hong Kong version of specs. We remain very confident on the competitiveness of the Hong Kong stock market.
City for our audience worldwide. This is Bloomberg Surveillance alongside Tom Keene and Lisa Bravitz. I'm Jonathan Ferro. Your inflation print just seconds away. Your equity market comes in a single point. Pretty stable on the S&P 500. With the economic data this morning, let's bring in Michael McKee.
Good morning, John. Well, this will be the most important release of the month next month. But this month is the month before we get to the base effects, which will be pushing inflation way up. And we don't see a big jump here. We see a CPI on a month-over-month basis up 0.4, the core up just 0.1. That leaves us unchanged, basically, from the, well, actually a tick down on the core to 1.3% on a year-over-year basis. The headline goes up 1.7% on a year-over-year basis. It was 1.4%, but that was forecast 1.7% increase for the month. Gasoline, one of the big culprits here, up 6.4% in February. It accounts for over half of the increase, so you can expect that to feed into next month as well because oil prices continue to rise. Food up just 0.2 in February. We should see services rise on a sort of regular basis once we start to see the economy open up, but right now services less energy up just 0.2 during the month. And the rent, owner's equivalent rent, the number that we look at as a substitute for housing costs, that one was up 0.3%. That's the biggest gain in some months because it's been basically just at 0.1. Rents may be stabilizing around the country after everybody moved out.
Look at the data a little bit more. John Farrell, we do get a market move.
Yeah, we do, and I think it's important. I was taught a long time ago, there's information content in the data. There's also information content in how a market responds to the data. And for market participants, the latter is much, much more important. This is a small case study into how this market will respond to inflation prints in the months to come. The concern clearly was an upside surprise for the market. You've got what the economists expect, then you've got what the market is worried about. And off the back of this, Tom, an inline print for inflation. And what do you get? Equity futures higher on the NASDAQ up by about 51 points, now advancing 0.4%. And Treasury yields come in to about 154. And to Mike's point, the big test comes next month when the base effects kick in.
Well, very quickly here, Mike McKee, what is your sense of how distant we are from 2% core? I mean, that's the lofty goal, but measure that gap, not arithmetically, but the emotion of getting to 2% core CPI.
Well, I think what you're going to see is a rather quick change in the CPI annual figures, because we're going to get into the next 2 months. In March and April next year, we had big declines in the CPI. It just fell off the cliff. And that's going to wash out of the data. So if we see that happen, mathematically, you get a big jump. And then if energy continues to move as it is, the headline will move up to 2% rather quickly. The core, maybe not as fast, but it will get there in the next couple of months. And the Fed is expecting this, and that's going to be the real market debate. Does the Fed react to this? Do the markets push the Fed to react to this?
There's also a question, Mike, about services and whether we start to see the pressure there, whether we can see potentially the cost of going out and doing things go up at a time when people really don't have the ability completely to freely go out and do things due to ongoing shutdowns and closures. What's your expectation there? What are we seeing in the services side of inflation, and how much is the Fed really looking to that?
We're not seeing much in terms of services inflation, particularly compared to goods. And the big question is, when will people feel safe enough to go out? And then what are the limitations going to be? Are there going to be enough restaurant seats for the people who want to go out? Food prices are still contained at this point. Are they going to jump? And do we see enough retail goods out there for people to buy when they feel like they can get out?
Going to have to migrate forward here. We've got a busy Calvin. Moffett Nathanson coming up here in a moment. Michael McKee, thank you so much. We'll do media here in a bit. Futures up 16 right now. The VIX comes in a full stick, 22.86. Mark Howard quickly here with BNP Paribas, senior multi-asset specialist. Mark Howard, is the inflation worrisome?
Not really, Tom. I think Mike covered it really nicely. And what's important, as he just referred to, is the Fed is going to be looking at this very closely. The market today is discounting the Fed's reaction function next week. And this means that Chair Powell's not going to have to pivot at all. And we're only going to see subtle changes in their forecast in the dot plot. And so it's not the risk event that some people might have been worried about.
A subtle reaction maybe from the Federal Reserve, maybe no reaction, Mark. How markets respond to it, though, that's more critical at this point for market participants. How do you think people will respond to those higher inflation prints that pretty much everybody predicts?
Well, I think, Jonathan, it's a very interesting dynamic, because I think that is going to be baked into the growth narrative that we're hearing increasingly from corporate America. At least I was talking earlier about the wave in corporate issuance and the amount of supply, not just Treasury, but otherwise. But corporate America is seeing growth, and they're pursuing growth in a number of different ways, not just the most beaten down companies like the airlines, but in other sectors. And they're doing it through M&A, through expansion, through investment, through sustainability initiatives. And so I think the inflation numbers, the higher numbers, are going to reflect both corporate activity and, of course, consumer activity when these fiscal outlays come into their pockets.
You know, there's a question of whether people have left tech for dead at a time when it continues to see secular growth, and really something that will continue for a long time. John was pointing out some of the market moves. In particular, that probably the biggest reaction is in the NASDAQ, with the NASDAQ shooting higher 0.7%. I find this interesting, John, because to me, what this highlights is that people have been looking for a reason to buy the dip in big tech, and it seems like the idea of not getting that much inflation is playing into this story.
I think it tells you what people are worried about. It sort of underlines what people are worried about, Mark. And a question that came up on this program a little bit earlier is whether the price action that we've seen in inflation-protected securities and anything that gives you that kind of protection is a conviction trade or just a hedge on a big position in the equity market in growth stocks. How do you process that?
Well, I think it's kind of like you guys were talking about Japanese equities yesterday. You know, inflation has been kind of a tricky trade as an offensive trade for a long time. It's almost been a hedge for many, many years because of the secular trend in inflation. So I think it's more of a hedge, to be honest, Jonathan. Of course, there are tactical and macro funds that move it around rather aggressively. But I think it's more of a hedge against the broader fixed income bucket.
Mark, do you buy the argument that we could see 10-year Treasury yields move to 2% and we could still see the S&P higher on the year?
Absolutely, Lisa. The challenge is the speed at which we get there. If we shot up to 2% over the next 2 months, that would be very disruptive to equities and particularly to the NASDAQ. But if it happens gradually, and if it happens not just based on U.S. growth, but on global growth, and I'm looking to the ECB tomorrow to provide some incremental signs of initiatives there that they may pursue to stimulate growth.
Come on. What are the incremental signs that we're going to get? Smoke signals? I'm serious. What are they actually going to do, Mark?
Well, Tom, there are a number of things, whether it's monetary policy, whether it's open market purchases, or whether they're tweaks, or whether it's browbeating, the fiscal budgeteers of different countries. They are behind the U.S. in fiscal. They're behind the U.S. in vaccine, and so the ECB is going to do what it can to stimulate growth there.
Well, John, this raises a question what they can do, right? I mean, the ECB has been having some issues actually following through, and they've tried to take things lower. They try to ease monetary conditions. How do you ease from ultra easy and then ultra easier?
Have they got a communication problem, Mark, at the top of the ECB?
I'm not an expert on the ECB or their communications methods, Jonathan. So
That's
I'm
how you dodge a question, Mark. You introduce the ECB, then you want to dodge the communication question of the ECB.
The answer is yes.
I think central bankers globally are in a tight spot. They're walking a fine line. We see it here in the U.S. and we see it at other central banks. I think they're no different.
Mark, I won't put you in a tight spot. It's always great to catch up, sir. Mark Howard, BNP Paribas Senior Multi-Asset Specialist. There's been some issues, Tom, over at the top of the European Central Bank in the minds of many people in this market around the communication and what they're doing.
Let's be honest, and we're biased here with our relationship with Madame Lagarde over literally decades here, but the jury's really out. John, frame that for us right now. Who is in support of the effort of Christine Lagarde?
So I think the chief economist is in support, but I don't want to say they've clashed, Tom. I don't want to say that, but what we have seen is that there's been a clean-up act with Philip Lane following President Lagarde. And that clean-up act we've also seen in the United States as well.
Okay,
with Chairman Powell, and the clean-up act has been Vice Chair Clarida as well. And I think what we've seen through the crisis is a tremendous response from both central banks. But I do think the inexperience of leading a central bank and not being an economist and not having your hands around monetary policy in quite the same way as either Clarida or Lane, for that matter, I think Lagarde and Powell at times have struggled. They've struggled over the last year, and I think Powell struggled over the last several years on communication too.
Is it a cleanup act of the politics or the non-politics of the United States of Europe, or is it specifically about Christine Lagarde?
It's a cleanup act of the economics and the communication, I think, for a lot of people looking at what Philip Lane has been saying. And I think for many people I've spoken to that are much more comfortable talking to me on background and not on the record on this program, they'd like to see Philip Lane in the press conference on those Thursdays in Frankfurt, Tom.
Yeah, there's a larger point here, though, which is that the central banks have been following the markets, and the markets have had a lot of power to push the central banks to their view, or people could argue the markets have gotten it right more often than the central banks have. And so it raises a question, about this whole parenting thing. It's sort of parenting toddlers, and people have raised this issue of whether the central banks are basically terrible parents that are just succumbing to all of the tantrums, John, that markets throw. And that, I think, is the credibility issue that you're speaking to.
I think a crisis keeps everyone on the same side. I think forward guidance helps bind the hands of a committee, and we saw that with Governor Carney. That's what he liked about forward guidance over at the Bank of England. I think once the crisis fades, that's when the division starts, and that's when you really need strong leadership. And Tom, that's when President Lagarde really gets tested at the ECB, when the reopening really begins and you get that pushback from the core about crisis-era policy in an era that's no longer a crisis.
I mean, I look at the inflation. I love what Mike McKee said about, we got to get through the data swing of 12 months and look back and all that. But I think there's some really trenchant notes on both sides of the Atlantic, John, on stop worrying about inflation until we actually observe it.
Amazing to see inflation come in line with estimates. And see the NASDAQ spike higher. Just off the highs now, up 59. We advance 0.5% on the bond market. Yields in just a little bit, still higher on the session to 155. Coming up on why you should stick with growth equities. Counting you down to the opening bell on Bloomberg TV with Kate Moore, BlackRock Global Allocation Thematic Strategy Team Head. There's a title from New York City. Good morning. This is Bloomberg Surveillance alongside Tom Keene, Lisa Abramowitz. I'm Jonathan Ferro. Heard on radio and on TV with futures up 10 on the S&P. We advance 0.25%. This is Bloomberg.
With the First Word News, I'm Ritika Gupta. The battle between news publishers and Facebook and Google in Australia is coming to the US. In Congress today, lawmakers plan to reintroduce legislation that would allow news media to band together to bargain with tech companies over payment for stories and data. Last month, Australia passed a law to force big tech to pay publishers for content. And the House is set to send that $1.9 trillion coronavirus relief package to President Biden for his signature. The measure will provide an economic boost that will last long after the $1,400 checks start arriving this month. House Democratic leaders expect final passage this morning. The measure also includes supplemental unemployment benefits, an expansion of child tax credit, and aid to state and local governments. Robinhood CEO Vlad Tenev is busy defending his brokerage against watchdogs, lawmakers, and critics. In an interview with Bloomberg TV, he fired back at a complaint that the Robinhood app uses aggressive tactics to lure inexperienced investors whilst failing to protect them.
We're going to defend the firm vigorously because we actually disagree with the fundamental premise. And I think the facts will come out, and it'll bear out that Robinhood is a customer-focused company that is operating with the highest standards of integrity, and will continue to do so.
And you can watch all of Emily Chang's interview with the Robinhood CEO on Studio 1.0 today at 1 p.m. New York time. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Good morning, everyone. Lisa Bramowitz and Tom Keene, Bloomberg Surveillance on radio, on television worldwide, and it is now a joy, an annual visit for us with Craig Moffett and Michael Nathanson of Moffett Nathanson, the founding partners, legendary at Sanford Bernstein. If you got your hands on their black book years ago, you read it cover to cover. And this, folks, more than ever we've spoken with Moffett and with Nathanson, the importance of our homes, our TVs, our kids, and what the future is for media. This is must listen for Global Wall Street. I don't even know who to begin with. I think Craig Moffett's better looking. Michael, I'm going with Craig.
Wow.
Craig,
oh my gosh. Start off with a bang, Tom.
No.
Michael, you're never going to hear that. You'll never live that down.
Guys, thrilled to have you with us. Craig, I was thunderstruck in your neck of the woods, wire and all that, at the cord cutting that's going on. When the pandemic's over, do we continue to cut the cord?
Sure, of course we do. And first of all, thank you for having us on. It's always a pleasure for us to do this as well. So thank you. And thanks for the kind words. Look, of course, we're going to continue to cord cut. And I think what Michael and I have been writing a lot about over the last year is that this has now become almost a self-fulfilling prophecy. We talk about two vicious cycles that have started in cord cutting, where first, it was about sports, where the sports contracts are fixed for the programmers. Their prices, therefore, keep going up. They have no choice but to push those price increases through to the distributors, cable and satellite operators, who therefore raise their prices and make it less and less attractive for anybody who's not a sports fan. Those customers leave. That drives the price even higher for the customers who are left. And you get this kind of this self-fulfilling doom loop of more and more customers leaving. Now you're augmenting that with the media companies themselves getting rewarded for taking their best content and moving it over to their direct-to-consumer platforms, SVOD and AVOD. And so that, too, is starting to accelerate, and you're strip mining the traditional ecosystem. So I think we're past the point of no return for this transition. And cord cutting now just moves all the way to SVOD and AVOD for non-sport.
Michael Nathanson, since our last joint visit with the two of you, what I have been thunderstruck by is, I'll make it narrow, the courage of Mr. Iger at Disney, the courage of people to be bold. Do we see more Iger-like courage in the coming quarters?
Oh, without a doubt, Tom. They've been rewarded for that vision and that courage. And everyone is now going to emulate Disney because Wall Street has rewarded Disney for the execution of that vision. And people want the same narrative for their stocks, right? So in the past couple of months, Discovery, Viacom have all joined, this bandwagon, Peacock and Comcast. And as Craig said, because cord cutting is going to accelerate, all the media companies are going to, in their own words, accelerate growth as well, and follow Disney down the same path.
Craig, you said something that was really important, non-sports. This was a key phrase because right now cable is holding on to sports, and there is a question of how much of a lock grip cable has on sports, especially as Amazon, I think, inks a Thursday night exclusive deal with the NFL. What's your vision going out 1, 2, 3 years in this relationship, Craig?
You know what? I'm going to defer to Michael. He's really the expert on sports, and I think Michael's done a lot of really interesting work. So, Michael, I'll let you answer that one.
Okay. Thanks, Craig, and thanks, Lisa. So our view is that only the biggest events, the NFL, Thursday night, Major League Baseball playoffs, NCAA playoffs, the biggest events will stay in the ecosystem. But you're starting to see, as you said, Lisa, the chipping away of the core sports. So Amazon's taking a package. You'll probably see the NHL do some deals over the top with other companies. So the bundle is going to still have core sports in it, but now sports fans will have to maybe pick other streaming platforms to get, secondary sports. So it's going to basically, I think, lead to more and more inflation for consumers when it comes to the cost of video, basically.
Well, that raises a question, Craig, just in terms of at what point people are going to cut the cord. I mean, have you done any research in sort of the price point at which people decide, forget it, it's just not worth it?
Well, I don't.
Sorry,
I was just going to say, Lisa, I don't think you can say it's just price anymore, because as Michael was describing the vision of Disney, as the companies are rewarded for putting their best content on their direct-to-consumer platforms, it's more than just price. It's about the product itself. And we've done some work on the video value chain that says you have to really think about what is coming being the aggregation of individual shows rather than the aggregation of cable networks. And cable networks themselves sort of disappear. And in that world, it is really hard to say there's a floor for cord cutting if you define cord cutting as who's buying the traditional bundle of cable networks. There has to be a bundle of cable networks to buy for that to have a floor.
Right. Well, so can I say? Sorry,
go ahead,
Tom.
Michael, please. Michael, jump in.
Okay, so our core thesis had always been there's about 50% of the U.S. population that's a sports and news fan. As long as sports and news stay in the bundle will survive to 50%. But now you're starting to see that fragmentation of people putting their sports on their own services and in the bundle. And that's going to lead to real, the acceleration of cord cutting.
I want to get to the lessons learned here, and I can go to Warner Brothers and all that mess with HBO, but I want to start to the two of you. And Craig, let me start with you. Maybe that's wrong, but I'm going to go there because Nathanson's better looking than you, Craig. And what I would want to say, Craig, is AT&T, what a train wreck. You published it was a train wreck. We all knew it was going to be a train wreck. What were the lessons learned from AT&T's effort to go into the Moffett-Nathanson world?
Well, the lesson is when you overpay for declining assets, bad stuff happens, right? I mean, I don't know that it has anything, it tells you anything all that specific about media as much as it does, it wasn't a mystery when they bought DirecTV that they were overpaying for an asset that was poised to decline. We wrote it at the time, and lots of other people knew it at the time. They doubled down in part because they got into so much trouble on the DirecTV deal that their dividend once again looked questionable, and they had to then spend even more to buy Time Warner. And in retrospect, remember what Time Warner was. It had some wonderful assets like HBO, but it was still mostly a collection of cable networks. That too now looks like it is a declining business that they paid too much for. So now the problem they've got right now is the balance sheet, and they have had that balance sheet problem for a while, and I don't see how they grow out of it.
But Michael, to me, the major lesson here is the creative side. Disney, hit a home run with Mandalorian and Jon Favreau. I get all that. Do you see any evidence financial types can do creative? I don't observe it.
No, Tom. I was going to say and jump on Craig's answer. The other lesson is you can't have AT&T management leading creative companies, right? And I think there is a certain degree of hubris that they had that they could run all these businesses, and you can't, right? creative businesses and the way that Disney approaches their business is unique, right? And that is why Disney has been able to scale so quickly. And I think slowly but surely, we on the street have realized that not every management team is the same, and you see it in the outcome. I think you hit something, Tom, that's hard to measure and hard to distinguish, but you know when you see it, right? And that, I think, is the other lesson of AT&T Time Warner at the end of the day.
Yeah, it's a great point, because remember, this is not the first time they've done that. The old timers like me, the telcos tried to get into the media business back in the late 1990s, and it failed miserably for all the reasons that Michael was just saying, right? Yeah. These companies do not do well in managing creative businesses.
Yeah.
Guys, we're out of time. Let's do this again.
Yeah.
Okay, let's do this again. This is like affecting every single listener, every single viewer. We do Moffat Nathanson with us, their wonderful research. I do want to point out, don't ask Lisa or me for their research. We protect the copyright of all of our guests. Lisa, what did we learn there? I thought that was superb.
I think it's really interesting that basically sports is the key component here for people keeping the bundle. And you're looking right now at about a 60% penetration of cable, rapidly going down. You have to wonder, the dam breaks when NFL goes away, when MLB goes away. And that's really a key question, and frankly, a key threat, Tom.
Yeah, well, one of the things we see out there, and this is important, is the Boston Red Sox, their rights crater. I mean, because of their pitching staff, but that's a different story as well. Lisa, what I see in the pandemic, and I know you and I are living this in real time, is our children have no collective memory of what I grew up with, say, Gunsmoke Sunday night at 8 p.m., whenever it was, or what you grew up a generation later. It's gone. It's vaporized for them.
Well, and I wonder what the new generation is going to look like, too. I mean, this has been the era of screen time and ample screen time, I got to say, going forward. And you do have to wonder how much that's going to push and accelerate this going on. How many bundles do you have? How many streams do you pay for? I try to cut them back constantly, and then they start yelling and screaming, we got to get this. It's a gimmick. But how many can you maintain? I mean, that's sort of a key question too, right? Are we going to get 3? Yeah. Can you get 5?
Paul 10? Sweeney's got like 14. I don't know what I got there. Lisa, let's squeeze this in here. This is so important. American Airlines, they're not up in the air. Their earnings are terrible, and it's like Carnival Cruise. They got people lined up in the tune of billions.
Yeah, we got the bond tranche of this offering upsized from $5 billion to $6.5 billion, and then you had the loan offering gone up $1 billion to $3.5 billion, so a total of $10 billion linked to the frequent flyer miles.
Yield?
Well, I mean, here's the thing. American Air has a reason to lock in borrowing costs here because there's a question of whether they're only going to go up based on the fact that yields are rising and that, frankly, people aren't going to really give them that much more leeway now that they actually have to prove that they actually can turn a profit. But on the flip side, you have investors that want some yield, right? And the U.S. is still offering something. So I think that this is sort of a confluence of everything. It's still an issuer's market, a $10 billion offering.
And something to do with the United States government as well and the bailout here in the pandemic. Extraordinary. We're at Wednesday, and it feels like Friday. I mean, a really interesting week here. We get a lift off inflation, or lack thereof. Futures up 16, Dow futures up 177. NASDAQ leading the way right now, 0.6%. That's a real...
That's interesting.
That's interesting in a reversal. We're in a full stick, 22.89 on the VIX. And the yield space, as Abramowitz calls it, 2 basis points to the higher, 1.55 off that ginormous move that we saw yesterday. Dollar is weaker. Stay with us through the day. Lawrence Culp, not at Danaher, at Generous Electric. Lawrence Culp, 12 noon with David Weston. This is Bloomberg. Good morning.
in the beginning of 2021. What are your biggest worries?
The inequality of the current world environment. It's troubling, and I think it's actually getting worse, which is a big challenge.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Inflation prints driving markets. Get used to it. From New York City for our audience worldwide, good morning, good morning. The countdown to the opening bell starts right now with 30 minutes to go. We begin with the big issue, a big plan with a major price tag.
This, nearly $1.9 trillion package.
1.9 trillion. 1.9 trillion.
Another 1.9 trillion.
We've got this larger stimulus package
on the heels of the $900 billion that was passed in December.
Unprecedented fiscal stimulus we now know is probably going to be signed this week. It's probably never going to be this good again.
This is the biggest fear that is starting to creep into the markets.
Is sort of the tail risk of high inflation.
It comes down to all this stimulus.
This is a very different kind of stimulus.
$1,400 checks.
This stimulus aims directly for consumer pockets.
That's where you're getting the immediate wage inflation.
What if there's runaway inflation over and above the 2%?
The debate is going to be, are we going to overshoot on inflation?
Let's bring in the Bloomberg team, Kevin Cirilli and Michael McKee. Good morning, Kev.
Good morning. Later this morning, the House of Representatives is set to pass the $1.9 trillion stimulus bill, and from there it will go immediately to President Biden's desk, and the president has said publicly earlier this week that he intends to sign it as soon as he gets it. But in terms of the tick-tock and the procedure, where things go from now, I'm anticipating that very shortly underway there will be a series of floor speeches from both sides of the aisle before the final vote. But we're now just several hours away from this being a done deal and what the administration is calling a crowning achievement of their first 100 days in office.
Some people in this party won't feel the same, Kevin. They didn't get what they wanted. They didn't get the minimum wage hike that they wanted. How will that process ripple through this party in the weeks and months to come?
It gives them more political capital to utilize in negotiations with the administration on something like infrastructure and immigration reform. There are already progressives quietly, and I would anticipate that based upon my reporting that those calls will grow louder, who are critical of what they feel is giving up too much ground in the stimulus bill.
Kevin, thank you. Kevin's really down in D.C. This is an important moment, a $1.9 trillion plan and a huge debate on what it will achieve. Will it achieve runaway inflation? And this market is so on edge about this that even a CPI print that comes in slightly below expectations, basically in line with expectations, is enough to drive equity markets, the NASDAQ, the S&P 500 higher, and Treasury yields straight after the print, just a little bit lower. Let's talk about that with Mike. Morning, Mike.
Good morning, John. It is kind of interesting because this is not the month, this is not the droid you're looking for. This is not the month you're looking for to see what's going to happen with inflation ahead, because these are February numbers and, of course, the stimulus program not into the economy yet. But you take a look, we get a 0.4 increase on a month-over-month basis in the headline CPI that pushes up the annual rate to a 1.7% rate, which is exactly what was forecast. CPI on a core basis comes in at 1.3% annually, and that is exactly that is lower than forecast. So you wonder what people are thinking. That chart we just had up there, though, shows you that the starting gun is about to go off, because it's March, April, and May we'll be watching where the numbers really went down. Now, here's something interesting. You're looking at the durables and money supply. these are the areas in which people think we might get some inflation ahead. Money supply has taken off and will only get larger with this stimulus bill. And durables, are we going to have supply chain problems that push up inflation as we go forward? Things to keep an eye on as the stimulus gets into the economy. And then you want to take a look at this. At this point, we are looking at increases for the inflation numbers that economists think will jump. The blue line is GDP, and the white line is the inflation numbers, and we expect a big increase. But then look at the dotted lines. They expect them to fall back next year. So the economists we surveyed don't think this is going to be a long-term problem. The issue is, does the market think it's going to be a long-term problem? And for that, the thing to keep an eye on is wages. That's what the Fed is going to be watching. Do wages start to rise? This is the employment cost index version. You can see we bump right back up after the drop. If wages start to rise, then you're going to have some real fears in the market.
Mike, thank you. And let's just sit there just for a moment. This is what it's about now. It's not an economics question. It's a psychological one. It's not for those of you with an economics PhD. You need a degree in psychology. How does the market respond to this in the months to come? Because everyone that comes on this program agrees on what the data will look like in the next several months. Base effects kick in, inflation kicks higher, we reopen. It's a country that's increasingly getting vaccinated more and more, week after week, and GDP starts to roar. How does the market respond? Let's get straight to PGIM's Greg Peters on this. Greg, I find the next couple of months to be absolutely fascinating, this tug of war, and just trying to get my hands around how the market will respond, how we'll recalibrate expectations of how policy will adapt. What's your game plan?
Yeah, so I think what you're saying is how will the market actually react when the strong data comes in, right? We've been talking about it now for a better part of a year, but how will markets react? How will the reaction function of the Fed react when the data is actually printing very high numbers? And I think that's an open question. But as far as I'm concerned, I don't think it does change the Fed's reaction function. To me, this is a market trading on a narrative more than kind of the underlying kind of value in the marketplace when I look at rates. So looking forward, I think, is more critical because what could continue to kind of move rates higher here is not the numbers that we're seeing in 2021. It's if 2022 numbers continue to move higher, because that really hurts the thesis that this is a temporary improvement in growth, and growth will kind of resume where we were pre-COVID crisis. And I think that's what people should focus on more so than the near-term data.
But you know what happens, Greg? You take the near-term data, it's the recency bias, and then you kick that out, extrapolate it out 12 months. And I think the 22 story is critical too. We take this 12-month rolling view whenever you and I talk, and it's how that 12 months out looks in about 3, 4, 5 months. Greg, when do you think 22 comes into sharper focus as this data starts to kick higher?
So I'm expecting the second half of this year, which is why I'm already focused on it, right? So to me, it's not a question of whether the job market is improving. It's not a question of whether we're going to have strong GDP prints. I don't think the market really cares if it's plus or minus 1-2%, crazy as it is to say. I think it's the first quarter next year will come into focus, and the first half of next year will come into focus in, I think, the third and definitely the fourth quarter of this year. So to me, that is really the sustainability trade to focus on, and not just like, okay, this is a stimulus-driven vaccine rollout recovery trade.
With that in mind, Greg, have you been looking at 30 years at 225, 10s between 150, 160?
Yeah, so I mean, you know, we definitely think rates over the longer term move back down. But there's such a strong movement in the marketplace. It's a really tough narrative to take the other side of. But I think Mike Collins talked about it on Friday with you, just looking at what's being priced in the market. So the 10-year tenure at the time when he spoke was over 3%. That's a lot higher rate environment going forward that we just don't see. But frankly, you know, the fundamental relative value trading of rates really is taking a back seat to the narrative. So while we think there's value, I think it's a really tough tide to swim against over the near term. But clearly, value is being created that I think is setting us up, I think for a much better future in fixed income is just a really tough tide right now.
Greg, do you think people are struggling to draw a distinction between what the recovery looks like and what the cycle looks like?
Absolutely. For good reason, right? I mean, we're seeing all this stimulus. We're coming out of lockdown. There's all these base effects. I think the market's smart enough to figure out base effects, right? It's just math. But the open question is, what's the durability? And honestly, I don't know if investors are focused on the durability yet, but more focused on kind of just the near-term data. And I think at some point over the near future, the durability question is the main one, and that is an open question as well.
Greg, it's great to catch up. You'll be sticking with us because I think this is the most important issue right now, drawing a distinction between the recovery and the cycle and how quickly the recovery happens. Morgan Stanley out in the last 24 hours. Here's the only line you need to know from Alan Zettner of the team. GDP is now on track to reach its pre-COVID level by the end of the current quarter. That is a very quick, fast recovery. And it's the nature of this cycle that's so different. The recovery that people expect, they expect it to be rapid. So when you're trying to draw a line between what the recovery looks like and what the cycle looks like, the recovery is going to happen really quite quickly. We'll talk about that a little bit more with Greg in just a moment. Let's get you some movers this morning. Good morning to you all. Here's Abby.
Good morning, John. And it's really amazing. We've had quite a turnaround this morning. Not so long ago, futures lower, now sharply higher on that tame CPI print. Less worries around inflation. This, of course, is giving another bid to big tech, in particular Tesla. If we take a look at Tesla, yesterday it was really ridiculous in a way, up 20%, its best day in more than a year, not on a change in news, but just the fact that you had yields easing and buy the dip action. But it's true too, again, for Apple, Microsoft, Amazon. So big tech is climbing once again, a huge rally. That's true for the meme stocks. That mania is continuing. And of course, GameStop has a little bit of a fundamental story behind it now with Ray Cohen his shake-up plan toward digital transformation. And John, just to add to the rally on the day, the reflation piece is here as well. We have energy climbing in sympathy with oil, and we have the big banks off of the highs, but nonetheless, it seems as though all parts of the market, all of these movers are moving higher, John.
Abby, thank you. 20 minutes away, the opening bell coming up on this program. The stimulus train continuing. The Treasury delivering another $120 billion of new government debt this week alone. That conversation coming up next with PGIM's Greg Peters and BTIG's Julian Emmanuel on why everybody is now a rate strategist. That's next. This is Bloomberg.
Women leaders were actually better at controlling the deaths from COVID-19. Do you think out of this pandemic, we'll see more countries be willing to elect female leaders?
When we look at women leaders, we tend to project on them baggage that they shouldn't bear.
Women are given an opportunity when no one else wants to do the job.
Women had a very clear objective. They wanted to save lives.
The women leaders, if you look at their careers, have also built up a level of trust.
In fact, women have to be better at communication in order to be elected as leaders, whereas this doesn't hold true for men.
We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women is not only the business of women, but men have to be part of it.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Their CPG history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into the SPAC thing a little bit before it became such a hot method of going public.
to go up slowly. When they move quickly, that's when the markets struggle. I don't think 2% is going to cause this massive unwind unless we're there, very quickly, and then that's a problem.
Andrew, are we all rate strategists now? Do you sit there and watch the 10-year auction tomorrow, the 30-year on Thursday? Is that what we are now, though, Andrew? Is that what you have to do? Does Matt Hornback get on the phone and you just have to say, Matt, where do stocks go tomorrow?
Absolutely.
Everybody's a race strategist now. That was Morgan Stanley's Andrew Sliman with us in the last 24 hours. Everybody keeping an eye on the auctions a little bit later, and tomorrow a 30-year auction from the Treasury. $2 trillion in fiscal stimulus on the horizon. Another $120 billion coming from the Treasury Department this week alone. Sarah Ponczek has the numbers. Hey, Sarah.
Hey, John. The fact of the matter is the bond market is in the driver's seat, so no one can ignore it, not even if you're not a fixed income strategist. You're an equity strategist, as we just heard. So, as you mentioned, 1 p.m. Eastern today, that is the point. Everyone will be watching another Treasury auction this year. This time on 10-year notes, we will see $38 billion of 10-year notes auction. There will also be a $24 billion sale of 30-year bonds tomorrow, and there's plenty more to come. The Treasury will sell an additional $2.8 trillion of new 2 to 30-year debt in 2021, of course, to fund deficit spending from COVID stimulus. That's 65% more than the 2020 supply expansion. That's what we saw just last year. So that is, of course, the supply side of the picture. But there's another side to it, too, and that is that bonds are selling off, yields are rising, simply because the growth outlook is improving. And that is the same story that has been driving the equity rotation, the cyclical rotation, the small cap rally, the value rotation, also the rally that we have seen in commodities. Here's your one-year performance. Value, S&P value, up more than 25%. Small caps, up 66% over the last year. Remember, this is before we saw the bottom in equities, too. Commodity index also up more than 20% over that time period. But yes, there is a flip side to that, and that is tech, that is growth. The NASDAQ 100 has clearly been in the hot seat, and correlations have broken down. In fact, if you look at the correlation between the NASDAQ 100 and the 10-year yield, it's now the most negative since 2016. So what this really means is that as bond yields rise, that matters for high-growth companies, that matters for companies with higher valuations, and we have seen that reflected within these companies over the last couple of weeks or so, John.
Sarah, thank you. These are typically conversations we save for Fridays on Bloomberg Real Yield, auctions, but now all of a sudden it's the obsession of the equity market as well. Let's bring in BTIG's Julian Emmanuel. PGIM's Greg Peters still with us too. Julian, can we shake this near obsession with the bond market in stocks? Can we shake that anytime soon?
We think it's possible that you can, and we think it may happen as soon as this week. You've got to get through the 10-year auction and then the 30-year auction. And if you look at the action in the yield markets going back to a week ago Thursday, when you had that original issue with the 7-year auction that was very poor, basically yields have chopped around here. And for us, that's part of the narrative as to why the NASDAQ is trading better all of a sudden.
Greg, let's talk about that supply just briefly. The supply later, 10s, 30s tomorrow. Any issues on the horizon for you?
Well, something to watch for, but this is just one of many innings to come. I mean, there's a tremendous amount of debt that's coming into the Treasury market here over the next year. So, I mean, this is something that I think we will be talking about. Obviously, what happened with the 7-year tailing last week or so kind of reset people's concerns. And the 3-year went well yesterday, but this is a lot of duration dollars coming into the market. So to me, I think it's really hard to disentangle rates and equities now, because what we learned is that tech is very long duration, and the valuation metric that people are pointing to hold up stocks, for example, is anything that has to do with the yield or yield spread.
Earlier on today, Julian, we were talking about the distinction that you've got to draw between the recovery and the cycle. And Greg making the point that the cycle is the more important factor here when you're taking on extra duration risk. Does the same apply to you in the equity story around the growth versus value debate? Who wins the recovery, the reopening? That could be really short and sharp. We've seen a lot of it already. Who wins the cycle? There's a different answer to that question, maybe.
Entirely possible, John. And look, our view, medium to long term, looking into 2022, is that value continues to reassert itself. When you look at these shifts, they tend to be very long in duration, on the order of 6 years to 10 years. But the problem, as I think you just pointed out, is that this cycle was so compacted. If you think about it, we had a 1-month recession down 31%, and then we've had the sharpest recovery on record. So we don't really know exactly when recovery transitions into cycle. And I would only say that the thing we need to watch out for is what Chair Powell talks about all the time. He wants core PCE over 2% for a multi-month period. But what you're finding out and what you found out this morning is that it's going to be difficult to get there. And that's where we disentangle cycle from the recovery.
Next month, the data is going to look very different when these base effects kick in. Greg, one thing that's really confused me and, in fact, frustrated me over the last couple of weeks is every time you've seen yields higher and cyclicals in the equity market do well, people run around calling it the reflation trade. Yet in the bond market, what's been driving things has been real yields and not inflation expectations in the last several weeks. I think words matter. Greg, when people run around saying it's the reflation trade, don't we have to be a little bit smarter about what's happening in the bond market, particularly in the last month?
I think you're quite right, Jonathan. In fact, if you look at the price action underneath the bond market over the past month or so, it's been, real rates moving higher, to your point, which is a very different backdrop than inflation moving higher. So what I think most bond participants kind of believe inflation has peaked out, or there's not a lot of room for inflation to move higher. And so all the movement is going to be in real rates, which is a growth story, which I think is a very different backdrop for risk assets as a consequence.
So Julian, weigh in on that. If it's a bond market and yields that are driven by inflation expectations or real yields, how important is that for you as an equity investor, the distinction between the two?
Well, at this point, we're very comfortable with real yield where it is. In fact, to us, it is likely to continue to creep higher. But if you look at the 10-year real yield, you're still solidly negative, just slightly positive in the 30-year. But actually, we think that can happen along with, actual bond yields, again, creeping up. Our view is that when you look at it, going back to what I said a moment ago, it's going to be very difficult to sustain inflation. If you look back to last week when OPEC made the announcement that they weren't going to raise production in the near term, what was the reaction? Copper sold off. It tells you that there are feed-throughs that we may not anticipate, and you could get to a point where actually the cure for high prices, particularly as the commodity market is concerned, is the high prices themselves.
It's a really good point. Greg, I want to finish with you on this. The obsession with yields has also been an obsession over duration risk. In a fixed income market, that's spilled over to equities as well, to growth stocks. Greg, you and I haven't had a conversation, I don't think, about credit risk for months now. What are you doing on the credit side?
So on the credit side, the credit cycle is in full swing. I still think we're very much in repair mode, but the cycle is compressed. So things are happening at hyper speed. So I think you will start to see companies lever up again, more transaction, M&A, LBOs, and so on and so forth. But the risk reward isn't fantastic, honestly. So investment grade corporates, we see a lot less value. We see a lot more value still in high yield bonds, emerging markets, and even lever loans in here. So I think it's a compression trade, but there's not a lot of room left for spreads to tighten in aggregate. So it's a kind of a tricky backdrop for fixed income right now.
Greg, good to catch up. Greg Peters from PGIM, and to Julian Emanuel of BTIG. And Julian, shout out to the resident fixed income expert at the Emanuel household as well. I'm sure he's close by. Good to catch up with you guys. Thank you. In this bond market right now, a ton of supply on the Treasury supply side and, of course, on the credit side as well. Lisa Brown is breaking a story a little bit earlier that we would get a boost to the bond and loan sales book of American Airlines today to total $10 billion. So they've boosted their offering. And that just gives you an idea about financial conditions right now. Maybe it's a race to get ahead of what might happen later this year, but we're still easy. The likes of American Airlines can come to market and issue $10 billion worth of debt. And that right there is what the Fed wants to see. And I imagine that's another reason why the Fed might be comfortable with what's happened over the last couple of weeks. Coming up, the analyst action you need to know. That'll be next in our morning calls. Then later, the rebound in tech extending to a second day after recording its biggest advance since November. That conversation's still ahead with BlackRock's Kate Moore. From New York City this morning, good morning. The opening bell just around the corner. This is Bloomberg.
Start your mornings with Bloomberg Surveillance. Tom Keene, Jonathan Farrow, and Lisa Abramowitz. Extraordinary market day.
This rally just keeps on going.
But there is a tipping point.
The business team you love to watch. Weekday mornings on Bloomberg Television.
Five minutes away from the opening bell in New York City this morning. Good morning to you all. A lift in this equity market off the back of a CPI print that, okay, came in just a little bit below expectations, but basically in line, and underlining just the nervousness around inflation prints in America right now before they even really get going. Next month is the one to watch. We're up 0.6% there. Let's get you some morning calls. A look at some of the analyst recommendations on Wall Street this morning. We begin first up with Piper Sandler raising its Expedia price target up to 159, a neutral rating. The analyst expecting airline and lodging trends to improve with the country reopening. That stock is up by 2.62%. Your second call from Scotiabank downgrading Chevron to sector perform. 115 price target. The analyst calling the company's Investor Day a non-event for the stock's near-term performance. We're up about 0.5% there. And finally, Wedbush adding Apple to its best ideas list. Analyst Dan Ives saying the recent sell-off has presented a great entry point for the stock. He says a $3 trillion valuation is on the horizon. Up next, more on big tech. The Nasdaq extended its gains after its biggest monthly advance, daily advance rather, in about 4 months. That conversation up next with BlackRock's Kate Moore. The opening bell just around the corner. You're watching Bloomberg TV.
Everybody says we should practice before we go to Mars, but some people say we need to practice on the moon. Well, you could practice on the moon, but you can do it at 1/10,000th the cost in the desert in Utah.
It's such an interesting new world.
The world is changing.
For us, it's not about being first. It's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. It should just be something that people do.
Global markets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lyons in New York. Perspective on the day ahead. Bloomberg Surveillance, Early Edition. Weekday mornings on Bloomberg Television.
This is a market that, over the past few weeks, has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
25 seconds.